Okay, this says I'm live now. Let me see if I can change my microphone sound. How's that? I think that's a little bit better. I am now live. Okay. I wasn't even going to do a live event till January. My other screen is over here, so if you see me look this way, is because I have aftermarket up over here watching a few key indicators. Um, Canadian dollar, wow. Wow. We're heading to 145 on this thing. Uh, Based on where we are in Canada, I think you could challenge the multi-decade lows on the Canadian, which in the 90s was like 155, 160. We're at 145. I don't know what stops us from getting to 150, which is okay with me. Last year, I moved most of my money out of Canada into American dollars at about 134. So this is not bad, but what an amazing ride on the Canadian dollar today. Almost everything had big moves today. Let's look at some questions. I think some people have some questions on TLT. I'll just do a more broad answer on that one. We had the summary of economic projections today showing a 3.9 for the end of 2025, which would put January 26 ZQ futures at 96.10. I think we're sitting at about 96 right now. I don't see a risk in a long position on ZQ because what's the downside? The downside would be they don't move at all for a full year or even raise rates. I don't see that as being a possibility. Lennar's earnings after the bell and their warning, I think, is sort of a warning about the economy in general. It's soft, and they stated that it's a much more challenging environment than they thought. My thinking is the inflation I think we saw for November probably had some impact from tariff anticipation, bringing stuff into the country in anticipation of rising tariffs. We know that happened for beef, or that is happening for the price of beef. Once you get into January, February, I think we'll start seeing different stories, unless, of course, he carries through with the tariffs. And I think right now they're more a baseball bat than an actual reality. I can't see him putting 25% on across the board on Canada and Mexico, knowing full well that it is going to hurt some significant industries in the U.S. And he is surrounding himself with billionaire businessmen who must, be on the same page as other CEOs, saying this is not a good thing. A good thing going forward. Here's how the market is going to react, and he sees his report card as the market. I think a lot of that is overblown. I think inflation is not going to be a problem. I think deflation is going to be the problem. I want you to think about where we've come from. Just put this in your mind for a minute. We've come from a year ago, a year and a half ago. What did it peak at? 9%, 8%, 9% on the CPI, and it's come straight down as growth went straight up. So I can see it coming down as growth came down and as interest rates went up. That would be standard textbook disinflation. But growth did not come down. Growth kind of accelerated. Employment gains were every single month. Aggregate demand kept increasing. Retail sales were strong. And inflation came down from 7, 8, 9% down to 3% while the economy was growing, while aggregate demand was growing. Does that sound like we have a problem with inflation? It should have been the other way around, and it wasn't. So I think what you have is you have a background of very significant deflationary forces. And what is keeping inflation up, I think, is the level of the government deficit and the handouts that are going on. Because the deficit, the majority of the budget is not government spending, it's transfer payments to individuals and to corporations, which shows up in C and I. And I've been making this case for some time that if you look at the past 5 or 6 years, government deficits have paid for pretty much 100% of the growth. If you have any attempt whatsoever with Doge to cut back on these transfer payments or to cut back on waste or spending, I think you'll see growth collapse quite quickly in the U.S. and inflation come down, and the Fed will have to change path. The other thing I would point out is this. Have a look at the last 2 years of the SEP, the Summary of Economic Projections. One thing that you'll notice is the Fed is absolutely terrible at forecasting anything. Because every SEP you get what they think now versus what you think last time. They're absolutely terrible at this. I don't know why we give them so much credit for being so insightful about their forecasts. They're absolutely terrible at it. So I've said several times, I think the Fed has made mistakes. I think they're wrong in their forecasts, and several times, especially when it comes to rates and the speed or the slowness at which the Fed would operate, that I think the market has it wrong. Right now, I think the market is lining up behind the Fed with the Fed funds futures for 2025, and I think it's wrong. Now, I'm comfortable with that because if I'm wrong, what's my downside? Let's say we end at 3% at the end of, or 4%, 3.9% at the end of 2025. That would make January 26 ZQ 96.10. We're at 96 right now. Where's my downside? Right? I have a position in which if I'm wrong, I don't lose much at all. But if I'm right, I gain a lot. So I've been adding to my ZQ position. I added throughout. I saw it coming down. I kept adding. I think I have a bid in right now for 95.985. I'm hoping that gets filled, but I'm just going to keep buying. I have no problem continuing to buy. As far as yields go, longer term yields, that's not the same thing as the Fed funds futures. That's not the same thing as rates. You have a lot more built into the longer end of the curve. I don't know what to do with that. I'm going to continue holding. I see no reason to go away on that one. But the narrative is a hard one to fight right now. And I don't know that we're going to get any fundamental information till January 21, till we actually start seeing the new administrations. Now it's the painful waiting game. And Trump is he's not a calming force. He's not a predictable force. He's not market friendly in his, he may be market friendly in the planned anticipated policies, but he's certainly not market friendly in not providing enough direction as to what he wants. I like to keep people guessing. Yeah, well, that's called uncertainty. The market doesn't like uncertainty. And trillions of dollars are tied to this, to your little game of, I like to keep the market guessing. And we got another 5 weeks of that. I think the sell-off today was well warranted. some of these things, some equities have just been going on to ridiculous levels. Tesla, I mean, you can be a fan of Tesla, but at the same time, you have to sit back and say, okay, this is getting a little stupid now, isn't it? So it was down significantly today as well. Same with the crypto space, just seemed to have one direction and only want to have one direction. And we learned today that if inflation is going to be sticky, don't look to Bitcoin to help you with that. It's a risk asset that sold off with the rest of the market, with the rest of the risk assets as well, and it will act that way on a percentage basis. It had a bigger move than anything else. Way too much frothiness had been built into certain things. It was a pleasure to see. I was buying today. I don't know if you were. I love days like this where it's just red. Not because of something fundamentally wrong with the economy, but something fundamentally wrong with the valuations, because good things get thrown out with bad things. So I was buying today. I bought in the Canadian REIT space. I started with some home builders. I think that the negativity is a little overdone, but well due. I don't know that we're at the bottom in terms of where the home builders would come down before finding a home, but you got to start somewhere, right? You got to buy in little bits on the way down. So I started nibbling there. One thing that I'm not going to touch is GM. I'm not touching that because if there are tariffs, if Trump just decides, no, I hate Canada, I'm going to punish them. I hate Trudeau, I'm going to punish him. GM's going to suffer very badly on that one. And I still can't get past the fact that the UAW didn't endorse him. And Trump has two P's, right? He has policy and he has punishment. Tariffs may be part of his policy, but he also has punishment. You didn't endorse me. You did not come down to King's Landing in Florida and bend the knee to me. You didn't give any money to my inaugural committee. Neither did Mary Barra. King Joffrey will punish them. I wouldn't touch GM now, not because I don't think GM is a well-run company that has great operating cash flows, but because they did nothing to curry Trump's favor. And this is what you have to do with the guy. You have to go down there. You have to tell him how wonderful he is, how much you appreciate him. Here's some money, sir. Here's a check. Bend the knee, kiss the ring. You got to do all of that. And the UAW did not. And Mary Barra did not. So I wouldn't touch GM at this point. I'm going to take a different approach on the questions because I can see a bunch of them are sort of in and around the same topic. So I'm just going to go right to the bottom. Any thoughts on the yen? I think the yen, like any other currency, is going to be in trouble against a strong U.S. dollar. There was nothing about today that suggested the U.S. dollar will weaken. I think the growth story for the U.S. is in place. The question is, at what cost? We know that the U.S. government has been buying U.S. growth for the last 5 or 6 years. How much more growth are they willing to buy? Japan's not going to raise rates. Japan has had trouble with deflation for years, and I don't think that any bit of inflation they're seeing now is going to stick around. I think they're having trouble with their deflationary cycle, which I say will continue. So I don't know that I would make a bet on any currency strengthening against the U.S. dollar tonight. I certainly wouldn't be cherry picking tonight, unless there is some reason why you think that now's a good time to bring any U.S. dollars back to your own currency. If that's what you're doing, then sure. But I don't know that I would go cherry picking in Forex tonight and see what I can find. I don't know that I would do that. Any thoughts on IWM? IWM fell really nicely. I've been short IWM for a while. I see no reason why I would ever change that. I was covering my short position little by little on the way down. I think I started at around 225, all the way down to 219. Well, 219.09, I think, was the last cover I did. And I only covered 2,400 shares out of 86 on the short side. And I don't know where they are right now. Let's have a look. There was some strength in the futures when futures started trading on Globex again at 6. IWM 221.10. So they're $2 above the last cover that I did. I probably wouldn't start adding to that short position until I saw 227, 228 again. Then I'd probably want to short it again. The Russell 2000 is small cap with a significant amount of unprofitable companies in there. And like I say, in the last couple of years, the U.S. government has basically purchased all the nominal growth in GDP in the U.S. through transfer payments. If they're going to be cut back, if small caps couldn't make it in that environment, how are they going to make it going forward? If one thing that Lennar pointed out was the higher interest expense, small caps are going to feel it as well, and a lot of those are high yield, and a lot of them are already unprofitable, and they're going to have to continue paying a higher interest cost. I don't know why anyone would be bullish on small cap at this point in time. I don't know that I would be a buyer of small cap stocks at this point in time. If there is a rebound, I have a hard time seeing why it would get back to 240. But this market, this market just doesn't seem to want to correct and stay corrected. It sells off, and then a couple of days later, you're right back to where you left off. It wouldn't surprise me on Friday if the S&P were closing at all-time highs again. It wouldn't surprise me. Now, that's not my base case. I'm not expecting that. I think it would be silly, but with this market, that would not surprise me one bit. If it did that, it would be like, ugh, well, what are we doing? But it wouldn't surprise me. I wouldn't be putting a video out Sunday saying, can you believe that? It would be, here we are. All the good news belongs to the equity market. All the bad news belongs to the bond market. Let's see. Have you seen the valuation on Cava? No, I don't even know what Cava is. I know it's some kind of restaurant chain. I don't. There's no Cavas in around where I live, so it's not like I've been to one and where I could say, okay, I understand. I have no idea what it is, and I'm not really attracted to restaurant stocks at all. So, doesn't really interest me. What do you think of Micron? I've held Micron since the last earnings, and I had a bunch of puts, and I was able to close those puts out of the profit because Micron had a good week. And I left my long position and a 115 covered call on it. And I could have gotten out of it this morning at almost break even, considering the gain on the call and where Micron was. And I thought, it's a small position. Let's wait for earnings. Jesus, that was not a good move. Where are we on Micron? Where is it? $87. I mean, that's down $23 from the 110 it was at, I think, early this morning. And the call on the 115 call doesn't cover that. So I had said in my update before that if Micron doesn't start performing, I'm out. I think I'm out. Yeah, unless this is just red ink because everything else is red, and we get a bounce tomorrow, and Micron finds its way into the mid 90s. I don't know. I think I'd still be out. I think I'd still be out on this one. Um, I've been uncomfortable with the AI story uh, when Nvidia started really earning. The big thing that I kept saying with each quarter is, now here's the thing: if you believe this is a 6, 7 year, 8 year build out, Nvidia is probably a good buy. But if you think this is a 4 or 5, 6 quarter build out and it's over, you'll never get your money out of this price. Is are we at peak AI investment and everything from here on in will be incremental? Has a lot of the really big investments been made, and the investments from here on in are continue but in a more incremental way? Is there AI fatigue among the companies because of a lack of another big significant step forward from Chat GPT that we already had? Um, I'm not really seeing much progress on this, and even the AI tools that are available, I don't trust them. I don't trust the answer from them. Google has these AI things at the top. When you do a search, it gives you some AI things, and sometimes they're really good. Other times you read them and you go, "That's not what I. That's not even what I'm interested in," because it picks up on a couple of words, but it's missing the nuance of what I'm searching for. I don't know. But for Micron, it's I've hung out long enough. It's not performing. I'm probably just going to exit that thing. What else we got? Micron seems a bit overreaction by the market. Well, yeah. So that's the thing, right? Has it sold off simply because the market is red to begin with, and it is an over, and it's trading in sympathy. Maybe it if you didn't have a sell off today, maybe it would have traded from 110 down to 104 or 100. Is 87 an overreaction? Won't know until the market turns green. And I don't feel like waiting. Yeah. Can you give an opinion rating on how Powell did today? Ah, you know, I don't know. I keep getting the feeling when I listen to him that he's got the feeling, or maybe he alone has the feeling that inflation is done. Um, he referred to the rate where they are now at being still quite restrictive. He pointed out that inflation has been making progress, significant progress, and he pointed to some components that, based on where market prices are now, he's seeing continued progress on this. This didn't sound like a guy who said, "Oh, we better slow down here." It didn't sound convinced that I think he wanted the 25 basis point cut. I think he's getting some pushback from some other people on the committee. I pretty much think January is a hold, unless you get some incredible breakdown in the market, unless you start getting, a January jobs report that's just ugly. I think January is probably a hold until we see what Trump does. I think you could probably get one cut in the first quarter, the third meeting in. I think you'll probably get a cut, because I think that if there are no tariffs, what you're going to find is you have a lot of significant inventory on hand from front end loading your inventory ahead of these tariffs. The deportations, they're sort of walking that back a little bit, saying, well, first we're going to start with the criminals, with the ex-cons, with the criminals. And I think they're sort of getting an idea of how absolutely difficult that is going to be. So I think he's very concerned about the market. I don't know that he's going to do anything that really scares the market. And I think Powell sort of feels that way as well. Or, he knows that Trump is going to keep hitting him over the head to lower rates. Anytime the economy is not doing well, lower rates, lower rates, lower rates. So maybe he's already, putting that rhetoric out there, that language out there, so that it doesn't look like he's being influenced, but that it is his idea. He didn't sound convincing to me that he thought that there was a definite need to go sideways for a while. He was asked specifically about a rate hike, and he says, I can't see. He says that's an extremely low probability event. I just, that's not what we're thinking at all. I can't see that at all. I believe him when he says that. Let me see other good questions here. Okay, answered that. Bitcoin worth a small portfolio allocation. Okay, so here is my position on this stuff. I do not see the utility of this stuff at all. I don't see it at all. I can send money to anybody for free already through my bank. If any other person in Canada, I can send money to for free through my bank. In Costa Rica, I can send money to anybody for free if they're in my bank. If they're in BAC, I can send money for free to anybody. I don't have a cost. Nice and easy. I can send colonies. I can send US dollars, no problem. If you're in a different bank, I think it costs me 75 cents. I sent 4 million US dollars from Canada to Texas a year ago. It cost me 50 Canadian dollars to do, and it took less than an hour to get there. I'm not understanding why I need a really expensive solution to get it done, and not have the faith of a trusted third party. We'll just call it a third party, for God's sakes. But I trust my banks and any Canadian bank far more than I trust any crypto dealer, any crypto exchange. The biggest crypto exchange turned out to be the biggest fraud, and the guy's in jail for how many years? The head of another exchange is an ex-con, just got out of jail, an ex-con. The guy buying up a lot of crypto is a two-time fraudster. These are your trusted third parties? I mean, you got to go through them. It seems to me ironic that your trusted third parties are some of the least trustworthy people, just to get to a place where you don't need trust anymore. Why not just stay in the banking system where all of this stuff is being done anyways? I see crypto as having zero intrinsic value. However, value is consensus based. If you think it has value, and you think it has value, and you think it has value, it has the value you think it has. And a lot of people think it has value. So I've used this analogy before. Hang on. If I came across a city of 2 million people who believed in God, but they had no Bibles, I have two strategies. I can talk them out of it, or I can sell them Bibles. I would sell them Bibles. If you come across a group of people who through consensus believe this has a bunch of value, and that group of people is getting bigger and the supply is getting smaller because private corporations are taking their decentralized, uncontrolled currency off the market, which is another ironic thing, is your decentralized, non-controlled currency is slowly being controlled by a small group of individuals and companies. Another contradiction as well. But if you look at the structure of that market and what's going on, as long as that group of people still continue to believe it has value, it has extrinsic value, you can take a long position, but you must understand that you're taking a long position on extrinsic value, not intrinsic value, which means you're going to need a way to measure the extrinsic value. How do you measure the crowd? You need a way to measure the crowd. Because if that crowd disappears, this all goes away. It all goes away. If all of the investors of a Canadian apartment REIT company went away, those buildings would still exist. Those tenants would still exist. They would be paying rent and I would own the whole thing. Thank you very much. I would love nothing more than for them all to go away and the stock trade for a penny. I would buy it all. I would buy it all. Thank you very much. What a stupid group of people, because there's intrinsic value. The assets produce a stream of cash flow on their own without having to buy more assets all the time. I don't have to have the value of the apartment buildings go up. They produce a stream of cash flow. It has intrinsic value. I can measure it. I can't do that with Bitcoin. All I can do is buy it and hope it goes up. So if I lose the crowd, if it loses the crowd, it's over. It can trade to a penny very quickly if it loses the crowd. An apartment REIT won't trade to a penny very quickly. It will trade to a really great price for those who can measure intrinsic value. But I believe there is no intrinsic value behind this. The vast majority of transactions that happen are happening to trade the very thing that was set up to reward the transactions that are happening. Do you get that circular flow? The Bitcoin is the reward for processing these blocks of transactions of the whatever they're transacting, but all they're doing now is processing the speculative transactions in the token that was meant to reward the miners for processing the transactions. They're living for their own existence now. That the value of it is in its own existence, not for it getting anything else done. That's my opinion. You may have a different opinion saying, well, it does, it has all of this intrinsic value. Well, then great. As long as you can measure the intrinsic value, off you go. I believe it has nothing but extrinsic value, but that does not mean it can't go up. If the crowd gets bigger and the supply gets smaller, it will grow up. It will go up. But how do you measure the size of the crowd? Keep in mind, there is no balance sheet or income statement coming on this thing. There is no fundamental report that shows up every 4 months. So sure, you can go for an allocation of this. But I would seem to think that you're betting on the crowd, not betting on the currency. You're betting on the crowd. You're betting on the crowd remaining uninformed. This thing will end badly. Its energy usage and its algorithm almost guarantees that it will end badly. It will end badly. Now, let me tell you a story. I'm going to tell you 2 stories. Okay. We keep hearing, and I'm one of these who keep saying, this is tulips or this is .com. What is it, right? If it's a tulip craze, then there is no intrinsic value to this. Tulip bulbs are tulip bulbs, right? If it is tulips, then it truly will be worth nothing when it's over. If this is the .com craze, out of the .com craze came some very large companies. Amazon, for example. Out of the .com were born some extremely large companies and a technology, the internet, which formed the basis of how many other companies out there, right? I saw the value of the internet very early. I saw the value of cell phones early in the early 90s. I was one of the first to have a car phone. I saw the value of having that kind of mobile, that ability to communicate mobily. I didn't need to be sold on any of that. And that stuff is all mass market. And it got to market sizes very, very quickly. Blockchain has been around 15, 16 years. And I don't see the value. I think it's an elegant solution and a very expensive solution to a problem I just don't have, and to a problem most people just don't have, that many people just don't have. And those who have the problem, the use cases are too small to justify a $2 trillion market cap, period. This thing is destined to crash in on itself simply because of the energy use. If the price continues to go up, the energy consumption is going to be ridiculous. Just last year alone, in 2023, just mining Bitcoin took more electricity than all the Philippines. All the Philippines. If you want to go to, I have it on the screen here. It's called the Cambridge. I said it in the Q&A video. Go to the Cambridge Blockchain Network Sustainability Index. That is what it's called. Cambridge, University of Cambridge. Cambridge Blockchain Network Sustainability Index. I think it's called their electricity index. Let me find it. Let's go to Bitcoin. Yeah, it's called the Cambridge Bitcoin Electricity Consumption Index. And this is based on the last 24 hours. Bitcoin network power demand based on the last 24 hours. It's got a run rate of 183 terawatts per year. 183. And if you scroll down, they have a historical annualized electricity consumption chart. And if you Google, it's Yale University, economics of Bitcoin mining, they have this great forecast for where, based on the difficulty adjustment, based on the halving, based on the progression of the chipset being used, from CPUs to field gate programmable arrays to, it went CPUs, GPUs, FPGAs, and now ASICs. Started with 110 micron, down to 7 micron. So energy gains are tapering off in that respect. And the more powerful the computers are, the difficulty adjustment adjusts so that blocks are added 10 minutes at a time to make sure that every 4 years you have a halving event every 210,000 blocks. How it works is the more processing power you throw at this, the harder the problem becomes, and it's a brute force algorithm, which means you have to do billions, if not trillions, of calculations to find the solution. So you got all these machines using all this power, and that's just the CPU power. You have to cool all of this stuff at the same time. That the marginal cost rises to the price of where Bitcoin happens to be. The higher it goes, the more miners come in because it's attractive. The more the difficulty adjustment makes it more difficult, the more processing power that has to be used. That it had some projections that if the entire world transacted on like if there was only one global currency, the electricity usage would equal the world's GDP right now, just for the electricity to solve the algorithms, never mind anything else, would equal the world's GDP. Clearly that can't happen. If it were just the US, it would be 56 or 60% of GDP would be just electricity use. So it's those are tulips. The currency itself, I think, when we bring it down to looking at that, I think those are tulips, right? So let me go back to what I said I was going to do. I was going to tell you a story, and in telling you this story, we can decide what is tulips and what is .com. This was 1994, late 93, 94. Yeah, somewhere around there, maybe late 94, early 95. I was in the computer hardware industry, selling computer equipment. And somebody had come in saying, "Have you heard about this internet thing?" And I was aware of it. I said, "Yeah, I checked it out a bit." It was kind of neat because you could type something in and search and you could find things, and it was still trying to find a home. I thought, it's kind of neat. It's a kind of a neat thing. And he said, "Well, more and more people are getting in on this. Why don't you got this back room back here? Here's what we can do is you have access to the hardware. You can get a whole bunch of these 56K modems." And back then it was 56K. The 28.8 was on the way out and the 56K was coming in. You can get a whole bunch of these modems and rent a whole bunch of lines from Bell. They'll come in, they'll put the lines in, you put the modems on here, and you can sell access to the internet. And he laid out the whole story and how much it would cost. And I was already looking at getting internet access, so I knew how much it would cost. And I thought, well, okay, that's really great. And then I said, if we're buying all these lines from Bell, what is stopping Bell from just doing it themselves? Oh no, they're not interested in that kind of thing. They really just want to sell you the line. They'll sell you the line. That's where all the money is. And I was uncomfortable with it. So I said, no, I'll pass, because I see us having 2 years with this before Bell says, "Thank you for proving the market. We'll do it ourselves." And that's exactly what they did. They did it themselves. When I was doing my PhD, my first year, many of you probably don't know, I have an undergrad degree in computer science. So it's not as if I'm not understanding anything about this whole crypto space or the algorithm. The whole idea of zero trust networks, like the blockchain, have been around for quite some time. The double payment issue was the thing that you had to solve, and that's what the Bitcoin blockchain does. But this was 2004. No, it was 2003. It was the winter of 2000. Yeah, it was the winter of 2004. My first year in PhD was in the IS department, information systems. And there was this company in this town just south of Cleveland, a small little town south of Cleveland, that were setting up this wireless network. It was called a Ricochet network. RICHO, well, how you spell Ricochet. It was a Ricochet network. So you can Google Ricochet network to see what that is. I don't know if they still exist at this point in time, but it was a private company setting up wireless coverage in a particular area. So you could drive in a car with your laptop and you could be on the internet. Back in 2004, that was revolutionary. It's like, this is not being done. So part of the research that I was doing at that time for one of the classes, one of the seminars we had, was sort of an analysis of what they were doing, along with a projection of where the market was going to be. And I wasn't very friendly to it at all. I was asking the CEO questions. I said, what is stopping us at the time, Sprint? What is stopping a Sprint or a Verizon from just doing it themselves? They have the cell towers. Why wouldn't they just do it themselves? Oh, they're not going to do the investment. They'll most likely just buy companies like us in every city. I thought, a patchwork of different technologies, that doesn't sound right. Like, I mean, aren't you spending a lot of money to prove the market for these guys? Turns out they were. None of them. I don't think there is a single Ricochet network anywhere in the U.S. But the Ricochet network, this was a thing. This was a thing in the early noughts. Just like the ISPs were a thing in the 90s. These things don't exist anymore because the big guys sat back and said, "Okay, let's just watch." And once the market was proven, then they stepped in. I see that happening. Once you move from a permissionless to a permissioned network, you don't need a currency, because you have a central authority that will append the blockchain. You don't You don't need a currency, or it'll just be their own. I see the same thing happening. I see that the technology is interesting. You may have some permissionless networks, but probably not an energy intensive one, probably a more energy efficient one. You'll have it for some small use cases, but they will be small. But if you're looking for who the big players are going to be, it's going to be the big ones that use blockchain. The blockchain's the .com. The crypto are the tulips. Most of that shit's going to disappear. Come on, Fartcoin. Have you heard of this thing? Fartcoin had a market cap of 700 million at one point. The Hawk coin, Hawk2a girl had a coin. What the fuck are you going to do with that shit? Those are tulips. Those are tulips. Come on, man. You could be the biggest crypto fan in the world, but you've got to admit Fartcoin's a stupid, stupid thing for $700 million. You must at least give me that. If you're not going to give me anything else, at least give me that, for God's sake. Otherwise, you're the one that needs to see a therapist, not me. I'm not the one with the problem. I'm not crazy, as I said, in a crazy way. But what I see happening in the future is the permissioned blockchains will be the big thing with a trusted third party, because I want a trusted third party. I don't trust your third parties, crypto space. I don't trust your third parties as far as I can throw them. I don't trust them at all. I trust my third parties. One thing that is missing from blockchain that I find very disturbing is reputation. Nothing is ever trusted. But this is what a brand has in the marketplace. It has reputation. It will lose a lot of reputation if it loses trust. It knows that. I trust Apple to give me good product. I also trust Apple to charge me a shitload of money for it, but I trust the product I get. Always, I trust the product I get. I trust my bank, and I have a reputation at my bank, because when I walk in, I'm recognized. I'm recognized and I'm treated a certain way, and I no longer have to jump through a whole bunch of hurdles that another person would have to jump through when they look at my account and they look at me and they think, is this really you? Is that really yours? Are you really transferring that much? Oh, we got to call a manager out here and we need this. That used to be the case, but I don't have that anymore. I want a trusted third party, plain and simple. We do have an investment in trust. We have contracts. We have the rule of law. We have the court system. And if more contracts come into being, the cost of trust doesn't increase because it's already paid for. But on Bitcoin, on that network, the cost of trust continually climbs. It's a very expensive form of trust. I do see blockchain being used privately. They'll be permissioned. I think there is some value in that technology. I think the cryptos will go away, and I think a few blockchains will survive. I believe that there are some organizations that already have their supply chain on a blockchain, so that all the participants in the supply chain can see all at the same time. Which, if you have a permission blockchain, what's the difference between that and an append, a database where it's append only? Right? You sort of have to ask that question. So I think that's going to be the bigger winner going forward, not this stuff that you see now. I think this stuff, all of this stuff is proving the market for the big ones who are just going to sit back and say, okay, I see what's going on. Now's the time. Now let's go. You've proven the market. I have a use case for this. I have a use case, and there'll be hundreds of different use cases, but I think the dominant form will be the permissioned form. The permissionless will exist in a much smaller form than it is now, in a much smaller market cap for particular use cases. That's what I see happening. But in the meantime, I'm not saying there isn't any money to be made. I think there is a lot of money to be made if you're playing the right game. And I don't think direction on some of these is the right game. That's me. I mean, you may have a different opinion. Let's see. What significance does the resignation of the finance minister have? It certainly calls into question this idiot's credentials as a feminist, right? This is how many women has he forced out now? Uh, uh, you know, by if you disagree with me, you have to go. And how many has he replaced with men? Right? Not a good track record for a feminist, which is a stupid thing to say to begin with, because I don't think he understands what feminism is. It's a theoretical lens. It's a way of seeing the world that feminism means. So I think he's using the word wrong. I think most feminist theorists would look at him and say, dude, please, you're not helping us out. I don't know if it's significant other than, just yet another indication that this party is barely even holding itself together. She was unqualified for the job to begin with. She was a journalist, wholly unqualified for the job to begin with. And now she's gone, and in leaving decides to make it public of why she's leaving. It doesn't look good. It's not a good look. Why this guy doesn't get the message that nobody wants him. Nobody wants him anymore. His own party, he's had issues with his own party that want to just get rid of him. The polls show him to be the most unpopular prime minister we've ever had. There was a recent survey done. I forget who did it, but it was about pride in being Canadian. And pride in being Canadian is something at like a 40-year low. Like 40-year low in holding your head up saying, I am proud to be a Canadian. It is at the lowest level. Since he's taken office, when he took office, I didn't see tent cities. Now I see tent cities everywhere. You didn't see drug use wide open in the street. Now you see drug use everywhere. I think this liberal experiment, this excessive liberal experiment, has gone about as far as you can take it. And then he comes out the other day and talks about the U.S. being how he had this sort of, I don't know, this disappointing tone to his voice. Like, who the fuck are you to pass judgment on a whole group of people who elected this guy? Twice they've had the opportunity to elect a woman, and twice they haven't. I remain a proud feminist, and I think still with the woke shit, still to this day, have you no shame? You don't know when to leave the party, and you don't know when to shut up. So I think the finance minister quitting is just another symptom of the sickness and the cancer that is in this party right now. I don't know that society has ever been so polarized in Canada as under this leader, and he's done nothing. In fact, he seems to get joy out of calling Canadians racist and calling them names. He's done that a number of times. However, I don't want him to go anywhere. I don't want him to resign, and I don't want him to quit. I want him to face another election. I want it to be very clear in his mind exactly how little this country cares about him. I want him to suffer the worst defeat any liberal leader has ever suffered. Now, twice in Canada, liberals have almost been wiped out as a party. Way back when Ignatieff was head of the Liberal Party, I think the Liberal Party federally got like 6 seats. They weren't even an official party anymore. And then Ontario, under Wynne, she was the premier of Ontario for a while. She lost badly because of her excessive liberal policies. And I think she ended up with, like, the Liberals had 3 or 4 seats in Ontario, and they weren't even an official party anymore. I think Trudeau can break that record. I think he can break the record for how few seats a Liberal Party can get. And I don't want him to go away. I actually want to see it. So I hope he sticks around. All right, let's get back to market questions here. I'm gonna scroll and see if I can find some ones here. I have a family that lives in Cuba. It's easier to send US through Solana over there rather than Cuban government taking a large portion. Well, again, there are use cases. I will admit that there are use cases, but the use cases are too small to justify a $2 trillion market cap on one coin. It's something like $5 trillion. If you add up the whole space, it's something like $5 trillion, which I think is $4.8 trillion too much. That's going to disappear. It's going to disappear. Question is, does it disappear from you or does it disappear from other people? It's going to disappear. Would you buy NVIDIA here? That's a good question. Let's have a look at where NVIDIA is as of yesterday or today. 131.85. It was having a good day. 135 from 129 up to 135. So I'm not up to speed on where the AI space is. I haven't been reading enough 10Ks in that space to look at the planned CapEx of as many companies as I can out for how long. I would seem to think that the place where you would see more of that would be in the venture capital space that are backing these AI startups. But the conversation as of the last couple of weeks seemed to have turned to the slowing down in the progression of the algorithms that are being produced. That you made this big leap forward with ChatGPT, which started the whole thing, but now you're getting this incremental increase. And this is how technology sort of progresses in these sort of punctuated steps where you'll get a nice step up and then you get incremental improvement for a while, then you get a step up after a period of time. We could have just seen the step up, and that further improvements are going to be hard to come by, which makes it hard to justify the sheer cost of the investment for something that might be obsolete in 4 or 5 years or might not be at the right level for the next leap forward. You would buy NVIDIA if you believed that the AI build out with these GPUs still had years to go. If you think no, there's another 10-year build out in this thing, then you would buy NVIDIA. But if you think that this is a repeat of Cisco in the build out of the internet, and that was thought to be able to go on for decades. Oh no, this will be built out all over the world. We've just begun. And it built out and all of this euphoria, nobody knew what to do, and it all came crashing down. The internet today is far bigger than it was 25 years ago, far bigger than it was 25 years ago, but Cisco never recovered those levels again because the dream was gone and the reality was here. Right now, the dream is here in AI. It could follow along with the .com that it really is going to be in 25 years, way bigger than it is today. But you first have to go through this big euphoria phase, this big down to reality phase, this big washout of everybody's throwing money at this. They can't all be right. They can't all survive. If they're all correct, then nobody's going to make any money on this because you have way too many companies competing for the same thing. So you're going to have a washout, and then off you can go. Is NVIDIA going to repeat a Cisco trend? Are they going to look like Cisco again? If you think so, then no. But if you think, no, this is different, this is a decade-long build-out, then you would be buying NVIDIA at this point. I wouldn't. I mean, it's not anything that I'm comfortable with on this one. If you have the applied level and you have I do my positions videos. If you have that, you know exactly what I'm doing and where I think the big wins are over the next year. You know exactly what I'm doing. And for some of you out there, you may not even think I'm doing that, but I am. But I'm not going to tell you because, of course, it's for my guys. Small cap optimism is over. I kind of think so. Let's just flip back over and let's have a look at where IWM is right now. 221.36. I think that's probably optimistic there. 240 to me seemed overly optimistic, and I took a lot of heat saying that I was shorting small caps. I took a lot of heat. Some people saying, "Well, why would you do it now?" I just if they didn't blossom in the years where the U.S. government was giving away subsidy money, running these big budget deficits, if you're going to have fewer budget deficits going forward, how are they going to do better in a leaner environment, right? So I would love the small caps to rally back to 240 because I think being short 8,600 shares was too small. I think I'd probably want to double that. I'd probably want to short 15 to 20,000 shares the next time. I'm still short 6,200 shares on this one. I was going to hedge out that short position with a long SPY. I think that's an interesting trade, to be long SPY and short IWM and be beta neutral on that, because it's a hedge against AI. If AI is going to really work out, you need big data sets. That's big cap. I think small cap will be left behind on that. I don't think that they have the ability to afford their own centers to design their own model or build their own model, nor do they have the data to get it done. So I thought, I'll wait another day. Maybe this is a 3-day sell-off. Finally, maybe it's a 3-day sell-off. I don't know. We'll find out. Thoughts on metals? Are you still bullish on gold and copper, given the economic update? How can you not be bullish on copper at this point? Just the sheer amount of power AI takes, these data centers take, and Bitcoin mining takes, just the sheer amount of power that they take. And if Trump follows through and decides a Bitcoin strategic reserve, if he does feel that, you know what, if you look at where most of the mining pools are, they're in China. 60% of the pools are in China. When I say 60% of the pools, you got to put that into perspective. It's not as if 60% of the Bitcoin is mined in China. 60% of the Bitcoin mined are represented by pools from China. 60%. Tell Trump that. Oh, he'll want to change that very quickly, right? So if you have an AI build out, while you have a crypto mining build out, while you have Bitcoin supply being slowly taken off the market and concentrated into the hands of private corporations and governments. Oh my God, what are the Bitcoin community going to say about that when no one controls the Bitcoin, when suddenly private corporations and governments control the whole supply? What's going to happen there? You're going to need more energy, more electricity. That's copper. If you think the EV rollout continues on, that's way more copper than any internal combustion engine. If you think the future is going to be more digital than it is today, that's copper. Electrons travel at half the speed of light on copper. The fastest, it travels the fastest on copper. You need copper. Gold today was a curiosity. I mean, it really pulled back. Where are we? Down $40 on gold. When I looked at the metals, I saw aluminum's up. But the gold contracts are down. I thought that's odd. Copper down to 410. The holding, you have to give it to copper to still be above $4. But gold, I'm puzzled with that one. I am puzzled with that one. Newmont really took a dump today. Everything took a dump. I shouldn't just pick on Newmont. Everything took a dump today. But I am puzzled on gold. Of if you have big concern about the Fed not cutting rates. The long end of the curve didn't respond well. TLT sitting at under $89 after in late trading here. The ZB futures not good. That gold normally is a beneficiary of that, and it is not. It is not. So, but in the last couple of years, the one thing that has been sort of consistent in this market is the inconsistency of the signals. Is why is this doing this and this doing that? One of these two things are wrong, but it continues on, right? Thoughts on nuclear? I think you're going to have to embrace nuclear. You're going to have to. If I am wrong in saying that crypto has no intrinsic value, only extrinsic value. Now, I'm not saying that it's going down. It can easily go up on extrinsic value until everyone loses faith. But let's say it does have intrinsic value. Even if it only has extrinsic value right now for the next year, you're still going to have to power everything. I can't see how with traditional forms of electricity generation you're going to get this done. You're not getting this shit done with solar farms or wind farms. There just isn't enough space to get it done. There isn't enough good locations to get it done with this stuff. So other than here and there, you're not getting it done. You're going to need nuclear. I don't know any good plays on this one at all. I don't know any good plays. My suspicion is that whatever plays you find, the hype is probably already priced into it. So there'll be some good companies, but not good investments, right? Would you short RTY and long NQ be a better pair? Over a long period of time, it always has been. Over a long period of time, it always has been. Over a short period of time, you got a lot of really lofty valuations sitting in NASDAQ. A lot of lofty valuations, more so than you have sitting in S&P. Let's see. I'm short Microstrategy. Then you had a good day, but I would be very cautious on Microstrategy, on being short Microstrategy for any significant period. It got to 338 today, sitting at 356, up 653. Bitcoin is flat, 100,700. I would be careful with Microstrategy for a couple of reasons. They get added to the index on the 23rd on Monday. Nobody's going to buy them yet, especially the ETFs that are passive investment vehicles. And index funds are not going to buy it yet because it's not part of the index. So you're going to have tracking error. And you can't have tracking error. So it will either be bought on the close Friday or on the open Monday. So if you're an index fund, you're not going to front run. You're not going to say, well, I'll buy it now before everyone else buys it, because what if it drops? As an index fund, your goal is not to outperform the index in any way. Your goal is to minimize tracking error, which means you want zero price risk. So you don't care what price you pay. All you care about is that you get the absolute closing price or the absolute opening price. That's it. Typically, you want the absolute closing price. So what you'll do is you'll put a market on close order for whatever you want, market on close, and hope there's no imbalance. But you're going to buy it in the closing auction so that when it gets added to your fund, it gets added at the closing price, so you have zero tracking error. That's going to happen Friday at 4 p.m. So Friday at 4, you might see Microstrategy just go parabolic straight up, because again, these index funds don't care about the price. They care about their tracking error. So I would not, if you are short, you've had a good day. You've had a good day. Don't get freaking greedy. You've got this event sitting in front of you. It's a significant buying event. So I don't know that I would be too eager to short it. Not only that, MicroStrategy needs volatility. It needs to go up, and then it needs to go down, and then it needs to go up, and then it needs to go down, and it needs to go up. But going in one direction doesn't help them. They need this. And they had a big down day like this. So if they want to make the bondholders happy and they want to continue with their convertible bond game, they got to make it go back up. They're motivated to make it go back up. Look for another stock report, another analyst report, probably from BTIG, suggesting strong buy after the sell-off, strong buy, because BTIG also handles its at the market offering. BTIG makes a lot of money from MicroStrategy as a client, and they offer coverage. I think there are 9 companies that do the at the market that offer coverage. So I would probably look for Saylor to be on CNBC tomorrow, because they need it to go back up. Look for an upgrade overnight into tomorrow. And then, of course, you have the buying power that you're going to get Friday on the close. So if you are short, don't get greedy. Don't be a hero. You can put a market sell on close, and you can short it at the same closing price that the index funds are buying it, because you don't care about price at that time. You only care about a coincident trade. But just be careful with that one. Do you think the Trump government will remove Fannie Mae and Freddie Mac from conservatorship? There is some talk about them going private. There is some talk about that. Why not? I mean, like, why not? At this point, I would say sure. Yeah, why not? Is not gas being used for data centers legit? I don't know enough about that. I know I've been reading the 10Ks of the data miners. Most of them have agreements. Some will vertically integrate and create their own energy source. I don't really know that they're a big source of demand, at least the Bitcoin miners. I don't know that they're a big source of demand for nat gas data centers. Unless you're co-locating. I mean, you need to convert it to, unless you're just converting it to a heat source. I think you can have nat gas piped right to you. But if you're converting it to an electric source, you need a utility, or you need some investment to get that done. Unless they're co-locating, I would say the big deal for natural gas right now is for liquefied natural gas to supply Europe, because I think that that part of balancing trade with Europe, Trump will say, you got to buy more stuff from us. And what a great opportunity for you to start buying your energy from us, natural gas. I think maybe there is the play. Where are we now on that gas? 330 something from not too long ago, under $2. We're 340 something. I don't know. And that gas is a son of a bitch to play. It's a tough thing to play. Because there's so much of it in the US. There's so much of it. And natural gas, more than anything, tends to be a very regional market. Oil can be a global market. With LNG ships now, you can get more of a global market on LNG, but on natural gas, but a lot of it tends to be a local market. So it's you almost need an expert on this. You know who I would recommend that you might want to listen to is Doomberg, the green. Is it a chicken or a rooster? The green chicken. I don't know why he uses that. I guess he's somebody who can't tell people who he is, but I can hear his voice. You know, I mean, if I knew the guy, I'd say, "Hey, that's Dave. What's he doing?" He knows more about energy markets, I think, than anybody out there. That if you're interested in knowing more about nat gas, head to his. I don't know if he has a YouTube channel or a Twitter, an X channel, but he's everywhere. I think you'd want to listen to him more than me on that one. Nat gas is the widowmaker for sure. It is. What's your opinion on Canada being the 51st state? Coincidentally, it's not the first time that has been brought up. I can remember this was a thing in the 90s as well when I was doing my MBA. That, what about Canada joining the US? There was a conversation. I don't know how serious it was at the time, but there was a conversation about Canada joining the US. Culturally, we're not that different in the way we think, because we get most of our media and entertainment and music from the same sources. So culturally, we're not that far apart, especially from some of the northern states. If you think about Minnesota, Montana, New York, Pennsylvania, Ohio, Michigan, we're really not that different overall. I mean, I lived in Cleveland for 3 years, and if you had just dropped me in the middle of Cleveland blindfolded and said, figure out where you are just by talking to people, I would have said, I don't know, beats me. It really isn't that different. But we are significantly different constitutionally. And I think that would be a big problem. Plus, I don't think it's just not realistic at all. I don't know that. I think the days of expanding countries are kind of over. I think it's just Trump being Trump, right? But do I think he wants the leader of Canada to report to him as if he were nothing more than a governor of a state? Yeah. Does he look at Canada as a sovereign nation or as an extension of the US? And you'll do what we say, and you'll get what we give you. And if we decide to give you table scraps, you'll take the table scraps, and that's it. But you are not calling the shots one bit. Do I think that he thinks that? Yeah. I think he probably thinks of us not as a G7 partner, but as a 51st state. Like, we'll do the talking for you. Thank you. We'll take it from here. You'll fall in line and you'll do what we say. Yeah, I think he probably thinks that way. Does he have more than in his mind? Does he see himself as the leader of the United States, or does he see himself the leader of the world? I think he sees himself as the leader of the world. And I think he is going to probably govern that way, that he is the leader of the world, and the world leaders will fall in line and they will listen to him. So in his mind, does he view all the states, all the countries in the world as states and all the leaders as governors? It wouldn't surprise me if in his mind that is how he thinks. Doesn't bother me. I mean, I don't care, but there's some growing talk in Canada about enough is enough. It's not funny anymore. You know, it's only insulting if it hits a nerve, right? I mean, if it doesn't hit a nerve, so what? It's funny. It's funny, right? We are. I think our economy is smaller than California's. Our population, is it the same as California's? What's our population? 41 million? What's California's population? I think California is probably richer than we are, bigger, so like in a tiny little sliver of land. I think they're richer than we are, and just as populous as we are. They have what, 40 million people, right? Let's see. Will you ever move to X? I see no purpose for it. What happens if the market cap of a stock is below shareholders' capital? So let me see what you're trying to say. That it's selling for less than book. So a couple of things on that. GM did during the union negotiations last year. GM traded down to about $28 a share, which was below their book by almost $10 a share. So they immediately did a $10 billion share buyback, an accelerated buyback, because you leave yourself open to being a takeover target very easily. You'll attract activist investors, lose control of your board, or have a takeover. And if you say no, they may go hostile on you. For current management, it's a pretty bad place to be, and no shareholder wants to see that. So, you know, if an activist investor showed up, shareholders would probably support them. It's a great way for you to lose control of the board and lose control of management, or lose your management positions altogether. Sometimes it's for good reason, that the market has already figured out that it's only a matter of time before you go away. Try Los Angeles alone. Really? Los Angeles alone is more populous than Canada? What do you think of investment advisors in Canada? I don't know. That question almost presupposes that there would be an answer that would be different from what do I think of American advisors. I think Canadian advisors are like American advisors. There are good ones, there are middle of the road ones, and there are ones that probably shouldn't be advising anybody on anything. I think Canada has what the US has. I think they have a distribution of ability. And I think you'd probably find that in the UK. You'd probably find that in Germany. You'd probably find that everywhere where there's good advisors, middle of the road advisors, and ones that really should, I don't know, sell life insurance. I don't know that I would say that because it's Canada, investment advisors face some issue that makes them less capable than other countries' advisors. So no answer on that one. Short end of the yield curve, still the most attractive place to be positioned. Well, when you say the most attractive, keep in mind this whole game is about expectations. Everything is about what you expect to happen in the future. So when you say the most attractive place to be, we first of all have to say, well, a proper question, instead of the most attractive place to be, is, does it offer the most attractive expectations? Well, I don't know. It depends on how you see things, and this is what makes a market. This is what's so great about the market, is you have one opinion, I have another. We can express it in prices. Um, if your opinion is more widely held, the price will move in your favor. If my opinion is more widely held, the price will move in my favor. What do you think? Based on your expectations, what do you think the most attractive place to be is, right? And it is based on your expectation. Now, the other part of attractive, especially when we get to the yield curve, is we have to break that down as, well, what do you mean by attractive? Do you mean the yield? Do you mean the potential for capital gain? Do you mean I have to be in bonds and I want the safest place, and this is the safest place even though it's not great? Is that what you mean by attractive? So now we have to define, well, what is your definition of attractive, and what is your expectation? It's not as simple as saying, is this an attractive place? Attractive for what? Attractive for who? Right? Have a position in TLT, but also XLTH. What are your pros and cons of switching to XLTLT, non-CAD hedged? That's a good one, right? I mean, the Canadian dollar has been not just beaten up, but there is a group of American dollars around it kicking it while it's down. You know, you almost want to step in and say, enough is enough. Come on, man. But where is it? It's a little stronger after hours. We went from 140, 144.6. We're at 144.4, 20 pips. There is a lot of reasons why the interest rate differential between Canada and the US will probably widen before it narrows, which would put downward pressure on the Canadian dollar. Trump does not like Trudeau. Another reason to be tough on tariffs. We can ill afford the GST holiday we have right now, let alone the $250 checks, and now another $1.5 billion for border security, renting helicopters, and try to get to 2% of NATO with what money? I mean, with what freaking money at this point, right? It's such a mess. And we are facing deflation. Our CPI month over month this week was negative. We have rising unemployment. We have a crumbling economy at this point, with the very real threat of flat to negative population growth going into the year, which I have a hard time believing liberals are going to do. I think liberals say it because they feel the weight of public opinion is against them, but I think when push comes to shove, they're not actually going to do anything about it. I think they're not actually going to send people out of the country or demand that people leave. You secure your borders. We got a lot of people that leave Canada into the US. You secure your borders, you leave those people here. There's a lot of good reasons why the Bank of Canada is probably going to lower rates a lot faster than the US. A lot of reasons why our economy will sink a lot faster than the US. A lot of reasons why we would probably see 150 on the exchange rate before we see 140, if I had to bet. So being non-hedged, you're getting a currency return that's helping. However, again, the Canadian dollar is being really beaten up. 145 is typically recession level for us, is usually a level of global fear where money rushes to the Canadian dollar. This is where we end up at 144, 145. And here we are without any of that, right? That's a good one. It's what Would I bet on the US dollar at this level, or would I bet on the Canadian? I don't have enough information. And again, Trump is not friendly to uncertainty. He is the embodiment of uncertainty, which markets don't like. So at this point, I'd say, because I don't know what the hell the guy will do, he's unpredictable. Will he punish, or will he lean towards policy or lean towards punishment? I have no freaking idea with this guy. So what can you do other than just stay out of the ring? I don't want to fight this one. What are your thoughts on CRE, especially since interest rates are expected to stay higher for longer? Well, the market has voted today on it, and not good. I think Boston Properties really took a dump today. Where are we? $74, and that is prime office space, and that's at 74. IYR, I don't know where they went. Where do I have IYR? Somewhere in here. Let me just IYR down to 92. We were running almost 100. Sort of like TLT. Oh, I don't know what those balloons are for. I think you saw them go by. I don't know what I did to make balloons go by, but there are some balloons for you. Okay, then it's somebody else doing the balloons, because I'm not doing anything to make these things happen. A lot of office space I wouldn't touch. I don't think I would touch healthcare either. Data centers, a lot of it is already priced in. I like apartment REITs. I still think those do fairly well. Short mortgage terms for most of this stuff, but I am of the belief that rates are probably going to come down faster than what most people think. So alpha is really made on contrarian plays, not by running with the crowd, but on contrarian plays. If CRE pulls back a little bit more, I think IYR would be a good contrarian play. Do you think CPI numbers are overblown due to the way housing is computed? I wouldn't look at CPI. In the US, just pay attention to PCE, the personal consumption expenditure. That's what the Fed looks at. It has a lower weighting on housing, I think like 16% instead of 32, 33%. For inflation, keep in mind that inflation measures the price level of an average basket of goods. Very few people are subject to the inflation, to that specific inflation rate. Everybody has their own inflation rate, depending on what you buy and how you buy, and how you deal with your budget, the trade-offs you make, the substitutions you make. Everybody has their own level of inflation. The lower incomes are probably the worst off, because there's little they can avoid in terms of the proportion that they spend on things they have to spend money on. I don't know that you continue to punish an entire economy with high rates, when, if you broke it down, we might find that lower income people are the ones that are hurting the most with inflation. Do you make 80% of the population pay for the uncomfortableness of 20%, right? I'm still of the thinking that inflation is not the issue. That it's going to be deflation that is going to be the big problem going forward, not inflation, but deflation. Bitcoin 85,000 by January 25. it is hard to see 85,000 unless you also think S&P is going to be 5,500 by January, right? It's hard to see how you're going to get 15% downside unless you think you're getting another 8 or 9% downside on the S&P, because it does have a very high correlation with risk assets, not with inflation, but with risk assets. I don't see how it can go up unless the market goes up. So if you have a view on S&P at 5,500 by January, you probably would be safe in having a view on Bitcoin at 85 by January. Will the recession last closer to 6 months or 18, or just a flat 4 years for Canada? I don't know. It depends on government policy. And right now, I don't know that we have a government that has a policy that is coherent, that makes sense. I think we have a government that's making it up as it goes along, because we have generally an unqualified group of people. I don't know if I blame the Liberal government for that, if I blame the voter for that. Right? We have to stop treating elections as popularity contests and start treating them as job interviews. But until then, what are you going to get? Oh, you'll get your diversity, your equity and inclusion, but look what you got. Look what we got, right? So as long as you keep treating elections as popularity contests, you will get popular people who turn to unpopular people, and you'll get policy that is just making it up as they go along, right? What do you look for when you say an industry or sector is already priced in? What do I look for? Well, you have to have some valuation metric. Every industry has its own valuation metric. That's fairly common. REITs, usually you can look at net asset value or a multiple of funds from operations. For SaaS and cloud-based companies, rule of X, rule of 40 tends to be a better valuation metrics than PE. So I think you just default to whatever valuation metric makes the most sense. And you can look at that valuation metric in two ways. You can look at it on an absolute sense. In other words, where has this industry been in the past? And is this multiple elevated versus where it normally would trade? And you can also look at relatively, is where is the multiple of valuation on this company versus the peers? So you might have an industry that's out of favor, but within the industry, you might have another company that's also out of favor within the industry. So it would be way out of line. You might have an industry that's in favor and a company within the industry that's in favor, and its valuation might look absolutely ridiculous. That does not mean expensive companies can't get more expensive. They can. And cheaper companies can get cheaper. So there is a momentum effect. We know that. So there is some value in getting exposure to companies whose prices have been going up, because momentum is a thing. But play those carefully. Don't be greedy. Play with tight stops and know when to walk away, especially when you're playing with overvalued companies. But an overvalued company can get more overvalued, right? When I first started in this game, I played momentum because it was the natural thing to do. Everybody that gets drawn into this game to begin with usually gets drawn in with momentum. Usually they become momentum traders and they make money, but then they end up giving it back because they don't understand how to track momentum and how to play it. And they end up chasing price around the board and giving it back. It takes, I would say, the easiest and the hardest thing to play is momentum. it's easy to play when you enter a market under momentum, because almost anything you buy is going up and you think, oh, look at this, I've got it all figured out. You know, the old adage of confusing a bull market for brains. You think you've got it all figured out until momentum turns on you, and then you can't figure out why, what's going on, and you keep putting money in and you blow up because you are no longer playing the psychology of the price. You're just playing the company name. If you're playing momentum, I liken momentum to this. This is a good way to play momentum. You're in a mall with your friend and you get separated. A rookie will play momentum by walking around the mall looking for their friend. That is chasing the price around. And an expert will stand in one place and let their friend come to them. That is anchoring yourself, and then playing something, especially something like momentum, playing a fixed strike on an option, for example. You have to know when to walk around the mall, and you have to know when to let the traffic in the mall come to you. Rookies walk around the mall. Professionals stand in one place. You have to know, how to play it. But you're not going to know unless you make mistakes. That's sort of the ironic thing in this market, is that you don't want to lose money. You want to make money, but to really make money, you must first lose money. You must first lose to be able to make it. I know that sounds counterintuitive, but nobody ever learned a good lesson making money. What lesson can you learn making money? All your lessons will come from your losses. All the lessons in your life will come from your mistakes. Nobody learns anything doing things the right way because it worked out. You suffered nothing. It worked. It's only when it doesn't work do you learn the lessons. So to be really great, you must first be really bad. And I think that any mentor that you have is not a good mentor if they protect you from every mistake you would ever make. A good mentor stands back and lets you fall. Says, well, I knew that would happen. Why didn't you say anything? I can't. You have to fall. It's the only way. Imagine training a boxer and making sure your boxer never took a punch. No, you're not going to train a fighter that way. No, your fighter has to get hit and get hit hard and get injured. That's the only way to learn. The only way to learn. Protect your chin. Don't drop your shoulders. Keep your gloves up all the time. Protect yourself at all times, right? What the successful arbitrary negotiation, arbitrary, I think you mean arbitration, look like as it relates to unions. I'm a big fan of arbitration. I believe that unions should be stripped of their right to strike, because nobody wants to walk a picket line. Nobody wants to be without a paycheck. I think that when a contract comes to an end, you have 3 months, 6 months from contract end to negotiate in good faith. And if you can't reach a settlement, it goes to binding arbitration, period. It goes to binding arbitration, and whatever the arbitrator says, that's it. So it's whoever can make the best case to the arbitrator. I think this way here, you stop all of this nonsense of shutting down half the economy because a small group of people wants a large group of people to sacrifice for them. And that's what a strike is. It's the sacrifice of the many for the benefit of the few. That's a dictatorship. That's not a democracy. That's a dictatorship. I don't agree with strikes at all. What are your thoughts on the USA medical and insurance system? I did a video on understanding the healthcare value chain, all the way from the pharmaceuticals all the way through to the distributors, the pharmacies, the PBMs, and the insurance companies. There is, I would have to say there is an issue with U.S. healthcare, and without even getting into understanding the healthcare industry in the U.S., you have two observations that you can make. And when you make these two observations, you say, clearly something's wrong. Spending per capita. No, I think US is number one in the amount of spending on healthcare per person, with some of the worst outcomes. They spend the most with some of the worst outcomes. Something is wrong somewhere. I think JFK Jr. is onto something with the food supply, saying it's the food. It's the food that's keeping people unhealthy. I will agree to that. I do agree that there is something with the food supply. When you have it dominated by a few big suppliers, yeah, I think there's something there. But how can you spend the most amount of money and end up with some of the worst healthcare outcomes? Right? There is something wrong in the black box. You have your inputs, money spent, your outputs, not very good outcomes. So whatever's in the middle, there is something wrong in the middle, whether it is the healthcare itself, whether it is a for-profit healthcare model that creates that, where me keeping you sick is the best thing for my business, or whether it's the food industry and what you're putting in your body, or a combination of the two, that you have this terrible type of food system that's heavily processed, along with a for-profit healthcare that makes more money the sicker you are. Maybe it's the combination of the two that do that. I don't know, but I think there's a big problem that needs to be solved there. When you look at what health insurance would cost, Jesus, like, how do some people afford health insurance in the US? Just getting a quote for health insurance is like, oh, come on. I've never been sick in my life. You got to be kidding me. That's what it costs. Well, you have a body and this is how much it costs if you ever got into an accident or this or that. Or it's not cheap. I don't envy you people in the US that have to pay your own healthcare costs. It's not cheap. I don't understand this comment about model type is a multiple linear regression model. I'm not sure what that means. Thoughts on CFA enrollment continuing to decline. Many of my peers that were considering CFA have turned to pursue a degree in data analytics to complement their finance degree work experience. Have they continued to decline? I haven't looked at the numbers for a while. I thought they were making a decent enough recovery. They're below the peaks that they had seen pre-pandemic. I do know that, or at least the last time I looked, they were below, and not by a bit, some 30, 40, sometimes 45% below that peak. Over the last 4 or 5 years, I have grown more skeptical of the direction that CFAI is going with the content. I disagree with some of the choices that they've been making, and especially with the level of social content that they want to put in, the ideology as it relates to issues like wealth or inequality. That is best suited for a sociology course, not for a finance course. I mean, if you're going to do that, why not put that same discussion in chapter 2 of any biology textbook? Is just suddenly break away and talk about wealth inequality. What does that have to do with what's going on here? I've disagreed with a lot of what they've done. I do feel that CFAI is due for radically new leadership. I think they need new leadership, and they need to get back to what and who they were, which was a tough designation to get that was rigorous and represented the best of the best, not to make it as accessible or more accessible over time. and to water down the content to make it less rigorous. This is the way I've seen it. This has been my feeling for a while now, and I've said it before. This is the way we're going. I'm not interested in this anymore. I'm not interested in teaching this anymore. If it's just going to be me repeating obvious things that you could learn yourself, where's the value that I'm adding? If all the rigor is gone and it's just a matter of, words on a page, there's no excitement left anymore. There's no aha moments. There's no, oh, this is, I can break this down. I got this. It's like, well, anybody can do this. The challenge now is finding all the mistakes, is reading, going, no, that's not right. That's not right. That's not right. So the only value I can add now is an editor, is correcting all the mistakes. Not interested. I think, much like the US, the Institute needs new leadership. I think it went the wrong way. I think it got ideologically sidetracked for a while in what its mission actually is. And it felt that it needed a more broader social mission. And that social mission found its way into the curriculum. And, I think that's the wrong place for it. So I don't know. For all you CFA candidates out there, those 3 letters behind your name have the value that the Institute endows upon it. And if the marketplace is not valuing it as highly as it used to, that is your value that is dropping because of the leadership. It's your institute. It's your designation. You are all members and voting members of that institute. I don't know. Maybe you're all okay with it. I seem to think that it would be, I think it would be in your best interest to put your vintage year behind your CFA, to let the market know that no, I did it when it was difficult. I did it when it was rigorous. I did it when it was selective. I did it when it was tough. Put a vintage year, because I think a 2019 CFA is probably going to be more valuable than a 2027 CFA. I'd be putting a vintage year behind it, right? So you tell me what you think. I don't know. Maybe you have a different opinion about that. I just saw your Q&A video. Can you dive a bit more about what would happen if government deficits do not reduce and they keep buying GDP? What if the market confidence in U.S. government doesn't dwindle? Well, if they keep buying GDP, then you got to be an equity owner, because companies are going to get that money eventually. You can give the money to the government, which then spends it with companies. You can give the money to the government, which then transfers it to companies, or you can give your money to the government, which then transfers it to citizens, who then spend it at the companies you own. In the end, the investor class gets it all anyways. So if there's going to be growth, you must be in the investor class. As far as bonds are concerned, I don't know that you're going to get a crisis unless you have a big concern about the ability to pay the debt, which I don't think you're going to have. But you could get higher yields for longer. The debt right now, the deficit, is on an unsustainable path. You cannot have these 6% of GDP deficits for long at these high levels of interest rates for long. You cannot have that. Something has to give somewhere. Something is going to break somewhere. Either the central bank goes to the 0 line to make it really free for the government to issue debt, or the bond market will discipline the government, because so much of the deficit will just be, or so much of the government budget will be just to finance the interest, that you'll never be able to get the deficit to 3%. Eventually, the whole budget will be interest payments on this trajectory. If you're going to have Japanese level debt you have to have Japanese level interest rates, which is 0%. The Treasury doesn't set interest rates, but the Treasury can certainly, at their weekly lunch meetings with the Fed, say, look, man, look, we're all in this together. You got to bring rates down somehow, right? What economic indicators would now be valuable to look at given the high government deficits? I wouldn't even look at anything right now. The only thing I would look at is employment. The only thing I would care about is employment. If you see job data slipping, if you see initial claims 250, 260, 270, 280, 290, you print a 3 going into January. You have, February jobs numbers are negative because January will be the month that, usually it's a big layoff month. I'd be purely looking at jobs numbers. I don't think I'd be looking at any other indicator other than jobs. Do you see us following Japanese path to rates then? If you're going to follow the Japanese on your level of debt to GDP, you have to follow the Japanese on your interest rates. You can afford a $5 million house if interest rates are 0%, but you probably can't afford a $2 million house if your mortgage is at 8%, right? I mean, you can afford a lot more debt if it's free. Microstrategy dip is kind of nice for QQQ purchase next week. Yeah, if it stays this way, it is a good entry point for any index fund that has to buy it. But again, the index fund does not care about the price of anything. They don't care. If I'm an index fund, I'm looking at MicroStrategy saying, I don't care. I don't care if it's $5,000 a share. I don't care if it's 5 cents a share. All I care about is my tracking error. I'm going to buy it on the close at whatever price it is. It matters little to me. So I don't know that they would look at it saying, good, it went down. They would look at it and say, I don't really care. I don't think they really care. An active fund might care. But I believe most active funds that use the NASDAQ as their benchmark would opt to underweight MicroStrategy. Still got to buy it, but I think they'd opt to underweight MicroStrategy. How much of the how much of the yield rise in the 10-year would you say is related to the risk premium? Why don't we have a look at where the 10-year is? I haven't looked today. I think I have a 10YY up here. 10Y, 4.505, 4.505 on the 10-year, 4.5. That has been sort of a resistance point so far. Does it hold? 4.505. And you're saying how much of it do I think is a risk premium? That was the question, right? Where was that question? I lost the question, but I think you were asking how much of the 10-year do I think is a risk premium? That's so hard to pull apart. There are credit default swaps on U.S. government debt, which to me seems like an oxymoron. How can you have a credit default swap on a risk-free security? But there are CDS spreads for treasuries probably be a good proxy for what the market thinks the risk premium is on the 10-year. Bitcoin still dumping hard, is it? Let's have a look. Where is Bitcoin? Down another 1,700, 99,000. Yeah, down it goes, huh? TLT still dropping. Yeah, well, it is a risk allocation. And again, when you have something with no intrinsic value, or for the coiners out there, if you say, oh, no, it has intrinsic value, very difficult to measure intrinsic value. Where's the bottom? Where would you say, uh-oh, right? So in every trade, you have strong hands and weak hands. Momentum will attract a lot of weak hands, but they're usually the first to flee. So that's what makes this stuff volatile. That's what attracts the convertible bond holders to the Bitcoin miners and to Microstrategy. That's what gives these companies, or their stock price value, is the value. These companies are not proxies for Bitcoin. Microstrategy is not a proxy for Bitcoin. It's a proxy for Bitcoin volatility. That's a different thing. That's saying two different things. One of them, a proxy for Bitcoin, might be a directional play. A proxy for Bitcoin volatility is not a directional play. You can't treat it like a directional play. You have to be able to play the same game. But this game is set up for management and for the bondholders. It's not set up for the stockholders. The shareholders are infantry in this war. They're cannon fodder. No one cares if they live or die. No one cares if they make money or lose money. No one gives a shit about them. Wall Street doesn't care about them when they're issuing bonds. The bondholders don't care about them because they're hedged, they're delta hedged. Management doesn't care because it prints itself shares for free. You guys are just cannon fodder. No one cares if you make money or lose money. That's the risk in playing this, is you may be playing the wrong game. And I think you are. This right now, this volatility, the bondholders are going, yes, bring it on. Wall Street is saying, yes, bring it on, bring it on. Management is saying, great, we could probably get another convertible bond issue in here with this kind of volatility. And those with long positions are saying, what the fuck? What the fuck? Well, it's not your game. It's not your game. You're meant to sell at this point in time to create the volatility. You're meant to be chased out of this thing. And then the price will go up and you'll chase it on the way up. And then the price will go back down because it has to, and you'll lose money and you'll say, what the fuck? This is a tough game to play. You should learn the game that's being played, and you can do quite well. It may shock many of you to learn, but I'm doing quite well in this space. Oh, I have positions. Oh, I am trading it, and I am doing quite well. If you have the applied level, I put my positions up. And I've got really small ones, experimental positions. I am doing quite well. All right. A lot of people be up shit creek without a paddle if the Bitcoin Ponzi scheme collapses. I don't know that I call it. I said Microstrategy is more like a pyramid scheme than a Ponzi scheme, which it is. It's just a different version of a pyramid scheme. I would say that this whole industry is more of a confidence scheme than anything else, is because it has consensus value. Consensus value means it has value if everyone agrees it has value. You must have confidence in it having value, and you have evangelists that, for the most part, grossly misinform you about a lot of things. If you move past the propaganda, if you move past this, it's easy to get drawn in by the elegance of the setup, of how this stuff is mined, of the increasing difficulty, of the increasing energy usage, of the idea that Bitcoin is just converted energy, converting energy into Bitcoins. So it's going to have value because the energy usage will go up, which means the price must go. It's easy to fall into all of that. And if you look at the math of it, if you look at the economics of mining this, you can see that, yes, for the economics to work, the equilibrium price is an ever rising price. But you must stop and step back and say, but for what purpose? For what purpose? Right? This is an imaginary, made-up asset that has no utility other than a very small use case in certain applications. The majority, 98% of transactions, are purely speculative, so that the blockchain is processing transactions for the coin, which is meant to reward for the transactions. Do you see the circular logic there? That on its own, it has no utility at all. If you step back from the elegance of the algorithm, and it is elegant, it is simply and deceptively elegant and resilient and beautiful. But if you step back and say, well, great, so what? I think this is one big giant Rube Goldberg machine. Do you know what a Rube Goldberg machine is? Anybody ever seen a Rube Goldberg machine? You can Google that. These are beautiful constructions, absolutely elegant. You take a marble and you drop it down, and it goes down a slide, and it spins a thing, which then sends a balloon up, which then pops and something falls, and a golf ball jumps and it spins around something else, and it knocks down some dominoes, and at the end, bang, it cracks an egg. This beautiful, elaborate engineering setup to crack an egg. It's like, what a waste of technology to do that. I think this whole Bitcoin thing is just a big giant Rube Goldberg machine. Elegant, beautiful. And it is elegant. If you start reading, especially the 10Ks of the Bitcoin miners, and then you start digging into the economics of Bitcoin mining, it's hard to see how the price can go anywhere but up. Oh my God, the economics of it, up. But step back and say, well, hang on a second, where's the value though? Like, I can see the price has to go up, but where's the value? It's non-existent. It's non-existent. So when you step back and you say, you know, as an engineering student, can you build a Rube Goldberg machine? And you probably would get right into it with you know, because you got to measure the speed of everything. Everything has to hit in the right places. It's an engineering marvel that does almost nothing. This is a computer science marvel that does almost nothing. If the number of Bitcoin is capped, who supports a blockchain without rewards? Well, there are what are called block subsidies. That's the Bitcoin reward that you make right now. It's 3.125 per block, and you can get a block every 10 minutes, which means 6 blocks an hour. So there's 18.5 Bitcoin that can be mined per hour globally. That is one part of what you make. The other part are transaction fees. So you can say, I'm going to send this much Bitcoin to this person. And that's a transaction. It goes into something called a mempool. And then from there, a pool operator will take a whole bunch of transactions out of the mempool and create a block and say, okay, here's the next block. And all the miners will attack that algorithm and try to come up with a number below some minimum number. The more that are trying to do it, the harder the algorithm, the harder the problem will get. The pool operator will prioritize the transactions who pay the highest tip. Basically, you got to tip them. So it's called a transaction fee, but if you the lower your transaction fee, the less likely your transaction will be included in the next block. So if you're sending somebody 2 Bitcoin and you need it to get there, you better tip. You better tip, otherwise you're not getting processed. You need it to get there in the next 10 minutes. You better tip, right? So it is now there'll be competition in tipping. So when the last Bitcoin is mined, you have to incentivize with the tip. Now, the more if there's somebody out there that works for a dealer or works for a casino, you will recognize the problem with that structure immediately. Especially if the miners are being incentivized to hold on to their Bitcoin. So let's take Riot, for example. It mines Bitcoin. From the time that it mines Bitcoin, there's like a waiting period. I'm not sure if you're aware of this. By the time you are awarded, you have to wait, I think it's 100 blocks. It's about 16, 17 hours before you can sell your Bitcoin. And they sell it because they got to pay for operations. Well, Microstrategy doesn't produce Bitcoin. It has to buy all its Bitcoin, but the miners produce Bitcoin because they have operational assets. So Riot just had a $500 million convertible bond offer. So they get $500 million from the convertible bond holders, and they say, well, if our price hits here, then you can have it. What we're going to do to collateralize the bond offering is, as we mine Bitcoin, we're just going to hold on to it. We're going to use your money to fund our operations. That's a better value proposition than MicroStrategy, because these guys don't buy their Bitcoin. They buy their Bitcoin at cost, at whatever the cost of getting it is. So as long as the price of Bitcoin is above their break-even rate, it's a better proposition. They have operating leverage along with the financial leverage, which MicroStrategy does not have, because MicroStrategy only has financial assets but no operating assets. Now, if you take the supply of Bitcoin off the market from the source of supply, the miners, because the miners were releasing 18.5 Bitcoin into the market every hour, 18.5. Now you've taken it off, and you add a commission on top of the transaction, you have a leak in the system. Not only are you not introducing any new supply, but you're slowly siphoning off. It's a tax. You're solely taxing every transaction. You're taxing every transaction. Do you get that? Do you see what's going on there? This game is Wall Street's game. It's not your game. It's Wall Street's game. How do you create a squeeze in the supply? Not only do you not just buy it off the market, but take a percentage of every single transaction and take it off the market. Every single transaction. Any dealer will tell you that that's where the money is. It's not in this side. Look, this side may be right and this side may be right, but I'm on both sides of the transaction and I'm taking basis points off everybody's transactions. That's the leak in the system. That makes derivatives not a zero-sum game. It's less than a zero-sum game because the dealer takes a bit of the spread. So when we say that derivatives are a zero-sum game, that's not entirely true. It's a less than zero-sum game because the dealer takes it on every single transaction. So if the miners are being financed by the convertible bond debt, the miners are where you want to be, not MicroStrategy. The operational assets are where you want to be, and you want to be with a company that's taking a tax off every transaction and holding it. If you take the miners off the market, if Wall Street takes the miners off the market by financing their operations with convertible debt, which is basically free debt, because they issue a lot of shares to begin with. They already issue a lot of shares. Most of them aren't profitable. But if they can hold their Bitcoin and transport it through time and have zero cost debt pay for their operations, and the price of Bitcoin comes up, you now make them profitable. But it's not enough to take Bitcoin off the market. You must take it off the market and tax every transaction. That's the miner. That's where it's at. That's what I do. I spend time, I go through these 10Ks and I say, okay, where is the opportunity? The opportunity is in owning the casino, not in being a player in the casino. If you're trading this, you're a player in the casino. You're a player in the casino that I own. Thank you very much. Come on in. I want you guys to trade like crazy. I want your transaction fees to be incredible. I want you as active as you possibly can because I'll own the casinos. Now that I've told you this, I don't want anybody else buying this stuff but me. The price of them came down nicely today. I've been buying Riot and I've been buying Mara. Been looking at Galaxy, which is a Canadian play. Core Scientific, I don't know what to do with that one. But if I see any miner grabbing a convertible bond issue, they're a buy immediately. They're a buy. Now, these miners make money in another very sick way, in a really sick way. They have energy agreements where they buy blocks of energy at low prices. Now, this gets really sick. Wait till you hear this. There's two parts to this. Part number one is if market rates go back up, they will they will agree to power down, and there is more money sometimes in selling that electricity back to the households at the higher market price than the price that they paid. There's more money in doing that than mining the Bitcoin. So they'll say, well, we'll power down for a while, and they'll do that. That also changes the nature of the algorithm, which changes the difficulty level going forward. So when they power back up, the algorithms are easier. It doesn't end there. There's one more step. I power down. I do this for a period of a month, let's say, and every 2 weeks the difficulty adjustment happens. And if I have a big enough a capacity, I can affect the difficulty adjustment of the algorithm. I will then buy electricity futures when I power back on, because that will drive up the cost of energy, and I'm capped at a certain price, and I'll make money on the derivative of the energy future. That's what Enron did. And this is how Enron made its money, by manipulating the supply of energy. Enron did it in a more direct way, but this is very Enron-ish. When all of this ends, when all of this falls apart, there will be questions to answer. There will be investigations. There will be controversies. There will be cover-ups. This doesn't end well. This doesn't end well. But if you're looking to make money, it's the miners, and it's the miners that are using convertible debt and holding their Bitcoin, because they tax every single transaction. They tax every transaction. And if you don't leave a tip, your transaction stays in the mempool. Oh, it might get included at some point when, well, there's not a lot enough transactions. Let's put it in this one, but there's no money to be made on the transaction fee. The pool operator will prioritize those transactions that have the highest tip. That is a tax on the whole system. When you stop introducing new Bitcoin into the system, do you see the squeeze that is being engineered here? Does anybody see the squeeze that's being engineered? There is a game to be played here. For those of you who have the applied level, you know what game I'm playing. You know what game I've introduced you to. On Friday, I'm going to introduce you to the step up that I made. I said last week I was ready to do a step up. I did a big step up today, and I'll introduce that to you on Friday. But that's where the game is. That's where the arena is. How sensitive are the miners to energy fluctuations? Fluctuations in energy prices, not sensitive at all. Most of them have energy agreements, so they'll buy megawatts at a time over a certain period of time, which means they're buying big chunks of energy at a particular price. So they'll pay that price no matter what the price is. They'll pay that price. When market prices spike, they have the option of saying, you know what, we'll power down and we'll sell you some of our electricity, and we'll get, it's called a, there goes my brain withholding a very common word. It is called a, and I don't feel like looking through my notes, but they get the difference between what their contract price is and the market price. So when you look at their balance sheet, you will see a derivative asset on there. The derivative asset, because they can do that, they have this fixed price and they can sell to the marketplace, but when the market price is lower, they still have to pay the fixed price. They count that as a derivative. It's not a hedging derivative, but it is for purposes a derivative. So when you read these statements and you look at the balance sheet, you look at these balance sheet accounts, you got to say, well, okay, well, I gotta break it down. What is this account? How does this have value? And it is, some of them use energy futures on top of their agreement. And I had to think about that. Go, why would I ever use energy futures if I have the ability to sell it back? Am I short energy futures or am I long? And then it occurred to me after I learned more about the difficulty adjustment that if you have a number of them that power down, to make sure that the block takes 10 minutes to do, if you have a difficulty level and you lose 20% of your capacity, it takes longer than 10 minutes to find a solution for that block. So every 2 weeks, the algorithm would adjust and make it easier so that it's still 10 minutes. So when it gets easier, these ones that powered off said, well, the algorithm's now easier. Let's dump our computers back on because it takes 2 weeks to do it. And since we know we're going to be dumping back on, let's buy some electricity futures for this particular market because we know we're about to do something in the middle of summer, in the middle of air conditioning season. That's some sick shit right there. That is some twisted, sick shit. I expect nothing less out of this industry, though. But if you own the casino, you own that, right? Michael Saylor is betting his life on the squeeze. Yeah, and misinforming along the way. He is misinforming about what's going on because he wants you playing his stock. He needs you playing his stock. Your infantry. He's not going to tell you where the real money is. Your infantry. And also misinforming you about a lot of things. The level of where money is printed, the level of money printing, 15% a year. No, you can look this shit up. You can look this shit up. There is a heavy dose of misinformation out there. Yale has some really good information on this. Yale does a lot of research on this. They've got a lot of nice white papers on this. If you want to get good information, Cambridge has some good information. Yale does. There's another one here. Hash rate index. You can go to hash rate index. That's got a lot of really great information. We can see the last block time was 10 minutes, 6 seconds. So when you see that increasing, you know that the next difficulty adjustment will be downwards. You can then expect a lot more miners to come on at that point in time, and you should see maybe it drop down. If you understand the economics of Bitcoin mining, you know that that's where the game is, not in all this other stuff. But again, I don't believe in any of this shit. I don't believe in any of this shit at all. I think if you walk into a casino and you stay there long enough, you will lose all your money. But I believe in the casino. See what I'm saying? I don't have to believe in the gambling. I just believe in the casino. I don't have to believe in the Bitcoin. I just have to believe that a lot of people believe it, and I'll own the casino. Thank you. And the casino is not the exchange. It's the miner. That's where I think you're going to see the bubble. That's where I think you're going to see where you want to keep your eye is on them. For instance, you got Bitcoin down 1.5% right now, but Riot is up 0.5%. Which one is this one here? BitDeer. BitDeer is up 0.5% as well. I think you combine a miner with convertible debt, and you have a casino, a beautiful casino. Or to put it in better terms, you have a taxing authority, right? You have a taxing authority. Explain us what you learned throughout your career based on idea buy low, sell high still works. Well, of course it works. I mean, buy low, sell high. That's of course it works. The trick is, well, what's a low price and what's a high price? If you have the applied level, I show you how to benchmark that to a delta, so that you can let the delta tell you where the high price is, the low price is. You don't have to look at charts or prices. Were you saying short the miners or long them? Oh, long the miners. Easy. Easy. Have you had a look at bit farms? No. I don't even know if they're on my list. If they don't have any convertible debt, I'm not interested. Where is my list? They are not on my list. No, they are not on my list. I want to see significant convertibles, and they don't have them. Mara has a lot. Core Scientific, Riot, a Canadian one, Galaxy. I don't know. Maybe they have convertibles. I haven't found them. What are your thoughts on Coinbase? Not interested. Not interested. Not interested. How important has taking notes been in your journey as a trader? How important is taking notes? I keep a book. I have these. I buy these 200-page things, and I make notes all the time. All the time I make notes. So without it, I don't want to type things in. A lot of times during the day, it's just open beside me, and you're looking, and you're just jotting down notes beside you, flipping the page over. Some days I'll fill 15 pages of this, and I just keep on going, because a thought will enter your mind and then it leaves, and then 5 minutes later you're going, oh, what was that? Always write it down. Always write it down. When I hear somebody talking on Bloomberg about something and they'll say a name, I'll put the name down. That doesn't mean I'm interested in it. I'm just going to write the name down. Then I'll look at it. What are they looking at? What's going on here? Is this something I should be aware of? Right? At the end of the day, isn't value what people think it is? Well, you're sort of that's sort of suggesting a social constructed aspect to value, that it is socially constructed, that without human interaction, something wouldn't have value. No, I wouldn't say that value is socially constructed, because I can get utility out of something without another human being around, which means it has value whether or not another human being has put a price on it, right? So if I were alone in the wilderness with a bow and arrow, that bow and arrow has significant value to me without you having to put a price on it. And if you saw me with it and you saw the value it had, you would put a price on it. So some things have value in and of themselves as an obvious statement, right? Other things, the value really does have to be more socially constructed. So some things have no value in and of themselves in terms of its utility, that if I hand you something and I say, here you go, it's like, well, what the hell do I do with this? Right? Well, that you sell it to somebody else. Well, okay, so is there a marketplace for it? If there is, then maybe its utility is in the fact that I can get more of my wealth by holding this for a period of time and selling it to somebody else. If it has utility, many things that you could say, well, you can live without that. A Rolex watch has utility in the fact that it can tell time, but do you really need a $20,000 piece of jewelry to tell time? Well, it has gold, it has diamonds, it's rare. There is something there that I can see. Its value is, I'm not paying 20 grand for a watch, right? Its value is questionable at times. Same with artwork, its value is questionable, but there's something there I can see. But you give me a string of zeros and ones and call it a digital currency. It's like, well, what can I do without it other than get somebody else to give me more money for it? Pretty much nothing. Well, you can transfer it to someone. Yeah, but couldn't I just transfer them cash? Yeah. So it's hard for me to see the utility of it. So there, I would say the value of something like that, to me, seems almost entirely socially constructed. It would have no value outside of the hope that somebody would give me more money for it. With artwork, if nobody gives me more money for it, it's on my wall. Wait till you see the one I have over here. My new desk is coming in soon, and it's going to face this way. And I got a nice one up there. But you know, of the $12,000 you have invested in a piece of art, I have it. It has some value to me. It's there. As opposed to saying, you know, holding up a little drive and saying, look, on this are inscribed some zeros and ones. What can you do with it? Fuck all. Sweet fuck all. What do you think? It's $102,000. But what does it do? Nothing. Nothing. That's the beauty of it. It does nothing. It's just everyone believes it's worth $102,000. Well, what if they stop believing it? What do you mean? Don't say that. Don't say that. Right? So that's what I got to worry about is what's the next thing that replaces that, right? All right. What do we got here? 2 hours, 32 minutes. I'll go about another 20 minutes or so. Let me find something that's other than crypto or Bitcoin. I think I've talked the hell out of that. No, there's a lie. I talked about crypto for a while, so it's all crypto. Anybody got a question other than crypto? What did you mean when you said money market is zero coupon? Oh, okay. So when you buy a bond, there's a coupon. So every 6 months, it pays you a coupon, right? When you buy a money market security, it is simply sold at a discount. It has no coupon. So if you buy a 3-month T-bill, you'll pay $96, and in 3 months, you get 100. Right? It's not as if you buy it for 100 and it pays a 4% coupon. It has no coupon. It's just you buy it at a discount. It matures at par. Those are called zero coupon bonds, or what are called pure discount bonds. Money market securities are typically sold. I don't know any that are sold on a coupon basis. Are typically sold on a discount basis, which means you buy them at one price, they mature at par, and see you later. Once you start getting into the 2-year, that is where you go into capital markets, and capital market securities typically are coupon bearing. They pay a coupon every 6 months. So there's a stream of cash flow. But you can also buy capital market securities that are pure discount bonds. Those are called zero coupon bonds, or zeros for short. They're usually bigger bond issues that are stripped. So it'll be a bond issue, let's say a $10 million bond issue that's bought, where each coupon is stripped into a series of bonds on every coupon. So you can buy coupon strips or principal strips. And those are pure zero coupon bonds. They do exist. Thoughts on mortgage lender stocks? If you have Barron's had a story. Let's see if I can find it, where there is let's see if I can find it. It said this. Market Watch. Why one of the biggest U.S. mortgage lenders expects demand to double in 2025. The Wall Street Journal ran a nice little promotion a little while back, $4 a month. You get Wall Street Journal, you get Barron's, and you get Market Watch for 1 year for $4 a month. Cancel anytime. Who is this? Country United Wholesale Mortgage. Strong 2025. He expects both home buying and mortgage refinances to pick up as interest rates are set to fall. I wonder if he was watching the FOMC today. This was at 2:22 p.m. on December 18th, so it was probably written up before. I wonder if he's changed his mind. But he expects lending, housing demand. He expects housing demand to double in 2025. I don't know. It's on Market Watch, so if you want to read it, you can get your own opinion about whether you believe that or not. Thoughts on Bell? Now trading at 2012 level seems to be a good opportunity. It is a network. It's the third largest network in North America. Canada is not a very good environment for networks, just because of regulations saying that they have to open their network up to competition. Competitors are allowed to use their network. They can't afford their dividend from free cash flow. They're going to have to cut that dividend. They just haven't figured it out yet, but they're going to have to cut the dividend. If I had to bet 25 before 45, I would probably say 25 before 45. They're going to have to cut their dividend. I'm out. I'm completely out of Bell at this point, and it just keeps going down, which makes me happy, because what you don't want to see is it going up after you get out. After you take your losses, just to watch it go back up would just piss me off to no end. So I'm, for those of you who are long, sorry, but I'm glad it's going down. Once they cut their dividend and they put a plan in place to reduce their debt, I may decide to go back in as a deep value play. But at this point, feels more like a value trap than deep value. I gave them a chance and they didn't perform. So screw you, Bell. I'm still a Bell customer. I mean, I still have 2 internet lines in my cell phone from Bell. I'm still a Bell customer because it's 3 gig up and down, which is the fastest in Canada right now. So got out of BCE after the last earnings at 39. Yeah, I wish I would have got out at 39. I got out in low 36, but I did sell a whole bunch of the where are we here? Wrong one. I sold a whole bunch of the $40 calls for December, 123 of them. So I think I'm not closing them because they're worth nothing. Why would I pay to close something that's worth nothing? So it helps offset some of the loss. Thoughts on BlackBerry? Do they still exist? So there's my thought on BlackBerry. They still exist? What are your thoughts on crony capitalism? And do you think the U.S. is headed towards it? No, I don't think. No, I don't think so. No. Why don't we say that about NFL teams? They hire experienced coaches. They hire winning coaches. Why? Why are you doing that? Because they want to win. So why is Trump appointing people with a lot of market experience who've been very successful in the market to run things? Maybe because they know what they're doing, right? Maybe hiring these career politicians just doesn't make a lot of sense anymore. Maybe hiring academics just doesn't make a lot of sense anymore. Maybe hiring somebody who has a track record of actually getting shit done in the real world kind of makes sense because this is the real world. So who cares? I think government can do with a lot more successful business people running the show. Let's get this house in order, for Christ's sake. Don't you think that they're in a better position to say, here's what's important? You know, here's what's holding back a lot of success in the world or a lot of success in our country. Excuse me. No, I have no problem with successful people in positions of authority like that. Residential real estate brokerages, anywhere real estate. I don't know much about that. Are you still short IWM? Yeah, I am. I was short 8,600 shares in the morning. Covered 2,400 from 225 down to 219 in 300 share increments. We're at 221.53, still short 64. I don't mind a rebound. I don't mind a rebound. Let's see. Thinking of buying put options on ZB to hedge long TLT. Any other cheaper options to buy insurance on TLT? Well, where is TLT? We're 88.85. Yeah, it is uncomfortable, isn't it? I don't have plans to do anything on TLT, and I have quite a few put options on it. I did close quite a few that were 95 and lower when TLT ran up to 94. I took that opportunity, but that still doesn't change my dollar delta on TLT. It was significant. I don't think I'm going to do anything on it. I think I'm just going to hold what I have. If I were going to hedge it, how would I do that? I don't know that I would be buying put options on ZB because you're right, it is expensive. I guess if you're US based, that's a good question. Sell calls. I mean, you don't have to get greedy on selling the calls. Just sell some calls on, you can sell some at the money calls on 30% of your position and sell some, 20 delta calls on the other 70%. You're looking every month to lower your average price. It does pay a dividend every single month, so you do have some income coming in. I think this is massively overdone, but we got to get through the next 5 weeks of uncertainty with Trump. That's where we are. Are you doing CFA level 1 live? I don't do any CFA stuff at level 1 or level 2 anymore. Only level 3. I'll be doing the level 3 sessions this year again, the Q&A sessions, the office hour sessions, and I think I'm doing the exam walkthroughs. I think I am. Yeah. BOJ kept rates on pause for the time being. That was no surprise. They're doing what they need to do given their level of debt. That's no surprise at all. Did anybody expect that they would? I believe in Sunday's market outlook, I said don't expect anything to happen with Bank of Japan. Not where they are. Thoughts on PBMs dumping 20% over the last 5 days? Yeah, there is a dislike for the PBMs. Most of the PBMs are owned by the insurers, by the companies that sell the insurance. Most of the PBMs are owned by them. You could argue that they squeeze profitability out of the pharmacies, and they do get rebates right from the pharmaceutical companies. They do negotiate for those rates right from the pharmaceutical companies. It does. I mean, if I'm covering you and you're paying rates to me, is it not in my best interest as an insurer to make sure that my cost of servicing you is as low as possible? That's what the PBMs do. The PBMs do get some percentage, but almost all the PBMs are owned by the insurance companies to begin with. Take out the PBMs, I as an insurance company would say, well, I'll just hire my own people to negotiate with the pharmaceutical company. I don't know that you're taking out one group of people of I as the insurance company would then replace it with my own group of people. So either I own a PBM or I hire people sitting at desks who do the same function as PBMs and look like PBMs, but I'm certainly not going to just say, oh, okay, I'll pay higher rates. As a pharmacist, they have absolutely decimated retail pharmacy. Do you have a belief that if you got rid of the PBMs, the insurance companies would just say, oh, okay, you get the money now? Or would they not just hire the people from these PBMs into their own organization, say, okay, well, what you were doing, do that, do more of that, right? Nice chair. It's an andesite. It has got a solid back. It's got these arms that move up and down, so that the problem with most office chairs are when you try to move up to your desk, the arms hit your desk, so you can't get much closer. These, you can lower the arms and you can slide right up to your desk, so your desk is right up against you. So if you're reading on the computer screen, you don't always have to lean forward. You can get right up close to it. And since my Cintiq, which is the screen I write on, is flat on the table, I don't have to lean over it like this. I can just pull right up and I can sit straight up as I write. It has helped my lower back considerably. So if you have sciatica, or your sciatic nerve gives you grief because you sit all day, but you have to sit all day, try one of these chairs. It's like sitting in your car seat. It's solid and supportive. You could sit in your car seat for a 6-hour car drive, but I always had trouble sitting in an office chair for 6 hours at a time. Not with this thing. I like this thing. Touch on the CEO shooting and your thoughts. Well, I think it's stupid. Like, you can disagree, but to kill somebody over it, I mean, that I don't know what I can say about that, but I can say that, if you look at the anger, and not only the anger, but almost the support that he got. There is something broken in the US with the healthcare industry if shooting someone in the back doesn't elicit, a lock them up, but there's even this free Luigi thing going around, and that he's got support. I mean, I'm only that way when you shoot a litigation lawyer, until people look at me and I say, fuck you. He's a litigation lawyer. He deserves it. I mean, but for the CEO of a healthcare company to get that, it's got to be something so systemic that when you have that many people that seem to be on board with that, like, yeah, okay, good. That's an indictment of the industry, not just, I mean, yeah. You never tried a standing desk? I do have a standing desk. I kind of like the standing desk, but the standing desk is difficult to write at for an extended period of time. And standing for a while does get a little bit tiring, that you do want to sit. And I don't want to keep lowering the desk, raising the desk, lowering it. So the standing desk is down in the gym. And I have double screen on there as well, so that when I'm down there, I have my if I'm down there in the day, I have my system on, so that I'm in touch with the market, Bloomberg on one, the quotes on the other. So the standing desk is down there, but I do have a standing desk. Yeah. It's not the healthcare system, it is the legal system. Our legal system is completely captured and almost impossible to seek remedy in. Have you noticed today on the conference that Powell said private domestic final purchase is best indicator of private demand? He said that a number of times, and really it is that's really, you're just measuring the consumer at that point, right? I think it's the consumer, and it's the I component less inventories, like taking inventories out of the picture. So it's C plus I minus the change in inventories. But yeah, that is the best way to measure demand, because the government usually is insensitive to the economic cycle when it buys. So is the Santa Claus rally still in effect, or has the Fed rate cut announcement just started? Everyone expected this, which is why I find the sell-off so surprising, because the market got exactly what it expected. Everyone expected this, and they got it. And the reaction was so negative that, I was watching and thinking, I love days like this, by the way. A day like this to me is like walking in your favorite store and finding there's a 30% off sale that you didn't expect, and everything is 30% off. It's like, well, this is great. Now, not that everything was 30% off today, but that's what I mean. It's like walking into a store and finding everything, or going to Costco and finding that everything that you want to buy is on sale. It's on one of the end of the aisles, $3 down, $4 down. It's like, what a lucky day. Everything I'm buying is on sale. That's how I feel when I see markets down 2%, 2.5%. I'll take some of this, I'll take some of that, a little bit of this. Oh, I'll take a little bit more of you, a little bit of you. Let's take some of this, some of that. I go shopping. I'm seeing green on the screen for a lot of names now, but there used to be a time when Globex was useful at night, where this would sort of carry over. Now, who the hell knows? I could wake up tomorrow and S&P futures could be up 120 points or down 120 points. Flip a freaking coin, flip a coin. And if Trump tweets something stupid in the middle of the night, who the hell knows? Like, I have this sneaking suspicion, and I don't know why, but I have this sneaking suspicion that he's thinking like a CEO. When a CEO comes into a company, what does he do? He throws everything out and just throws everything out so that everything going forward is good. Nothing to write off, only write-ups. Take all the impairments you can, shut everything down, throw everything out, impair goodwill, impair this, impair that, impair these assets, make it really ugly. That's what TD's last earnings were, is throw everything out. I wonder if he has some agenda from here until Inauguration Day to ensure that the market tanks so that when he takes over, he can be responsible for a 30% increase in the S&P. But it's hard to get 30% off 2 record years. But if you push the market down 15%, will Trump jump on this and say more stuff to add uncertainty to sell the market off so that he can come in as a new CEO and claim credit for everything? Is he throwing everything? I have a sneaking suspicion that he's not above that he's not above doing that for his own ego, not above destroying a whole bunch of value just so that it can recover under him for his own ego, so that he can say, as Biden was leaving office, the market was selling off because, he did what? He gave P&G Energy in California a $15 billion loan. He's given a whole bunch of pardons. He pardoned his son. What else did he do? He gave a whole bunch of money away. Also gave a bunch of money away to Ukraine. He's giving a bunch of money away at the end of his term. In Trump's mind, this is an opportunity to reset the market at a lower rate so all the gains are his, and blame it on Biden doing all this stuff. Oh, he was trying to ruin my presidency by getting us into more debt, by giving away more money. The market didn't like it. You know how Trump will just make up a story and that'll be it. I got a sneaking suspicion that he might want to do something like this. I wouldn't put it past him. I don't know. What do you think? Do you think that sounds like something he would do, is throw everything out so that his first quarter earnings are going to look really good? I don't know. Thoughts on him calling Canada 51st state? It's Trump. It's Trump. What more can you do, right? Are you going to consider covering the later chapters of John Hull's futures and options market? No. I've done what I've done on that one. That's as far as I really care to go. It's somebody else can do it though. VIX plus 74% stands at 27. Yeah, it jumped. It jumped today. Last I saw it was up 58%, plus 74%. Do you think it's already a good time to short about the 32 is usually a number. 32 is usually where you would expect it, that if there's going to be some shorting of volatility right around 32. Let's have a look at SPY's percentile. Woo, 94th percentile. Volatility's back. Now, if you think that this is overdone, you got a 587. If we look at let me just look at where the premiums are. An ATM, 587, 30-day expiration, $12.50 at the 587. That would would give you an effective put price of 575. What's that, a 5% correction? 5% down off the highs. I don't know that that's enough. But nice volatility on that one. Let's look at some others. One that I think looks really nice right now. It's a triple levered ETF, and I never really go in for these things. But it's NAIL, NAIL, NAIL. IV over 100% on this one, and it's for home builders. And I think the home builders have been beaten up a lot. This is sitting at 87. If you look at the 30-day to expiration option at the money, 87, it's roughly about $8. So you're picking this up at about 79 if it's put to you. $8 on 87. It's almost a 10% 10% premium of the strike price. But triple levered, these are dangerous things, right? But if you want to be long the home builders, I normally don't like these triple levered, but if there is going to be some rebound in yields, especially on the 10-year, and mortgage rates come down, this could bounce a lot. However, I think Lennar's earnings are going to carry some negative sentiment in the home builder space for a while, but I got my eye on this. The premiums are just so big and fat in here. I don't know that I can ignore them. Implied volatility 102%, up 22, went from IV of 80 to 102. It's volatility percentile, 13th week 100%, 26th week 98%, 52-week 99th percentile on this thing. That's a contrarian play, right? Is a long position on NAIL. I don't know. I haven't done anything on this thing, but it's on my screen, so that tells you something, right? My eyes are looking at that thing. 102% volatility on those options. I think what would be nice on this one, let's try this out. Think about this. Let's go to the March. This is 93 days. Let's look at an 80 put, $10, and let's look at the 100 call. No, let's go a little higher. You go to the 107 call, 80 put with a 107 call. That's a zero cost risk reversal at this kind of implied volatility, which means if you get a rebound, you get two things. You're going to get delta moving in your favor, and you're going to get implied volatility dropping. Those put premiums are going to come straight down. And as it's moving up, the delta will inflate the call. This is looking nice for a risk reversal on a March risk reversal. That gives enough time for the market to get past inauguration day. To not take advantage of this level of implied volatility is a crime in and of itself, I think. All right, let's finish up. A couple more questions and we'll finish up. Post-close, Lennar's results surprised negatively on gross margins as well as orders, and will give folks further reason to be negative on the builders. I think you're right. I think that negative sentiment carries forward, especially after Toll took a dump, Toll Brothers, and now Lennar. Where are we on the home builders? Where is Lennar right now? Lennar finishing at 133, down 8.83%, down $12.88. DHI down 3.72, down $5 today. Toll Brothers still going down 123. XHB 105. 105 on the HXB. I don't know how much more downside there is, but I think there's some downside to these guys. That's something to watch. You have a structural shortage of housing in the U.S. anyways. To me, it seems like a nice 2-3 year play if you can get a nice entry point on the home builders. But I don't know that I would go much outside of DR Horton or Lennar. I don't know that I go much outside of those. Starbucks, my thoughts on Starbucks. Overpriced for nothing special at this point. The Starbucks that I've gone to, it's always a wait. Always a wait. Even when they're not doing any takeout and you're like fourth in line, it's like, okay, this is 15 minutes here. This is 15 minutes. You're fourth in line. It's, it's 15 minutes. It's so you move on. They need to speed it up somehow. Maybe they need to stop hiring sociology and political science graduates and actually just hire people who know what they're doing. Everyone there's got a poli-sci degree. Let's see. All right. Okay, so that's it. 3 hours. My next positions video is up on. Give me a second here. Is up on Friday. I'll introduce my new positions there, especially on the miners and how I'm playing the miners, the Bitcoin miners. That is it for. One more thing. The Understanding Bitcoin Mining video that I'm working on, that will be up. And Bitcoin miners, this surprised me, are classified under software applications on the GICS code. Did anybody know that? I thought I would find them in information technology. And I looked around, I go, well, where are the miners? They're in software applications. The miners in software application. Don't know why, because the software they run is open source. Why would they? I don't know. Yeah, somebody's got to talk to the GICS classification committee and say, what the hell are you doing? I would never have thought of finding them there, but sometime before New Year's, because you got Christmas coming up, sometimes before New Year's, I'll have a video up on understanding Bitcoin miners, and I will be using Riot and Mara. We'll do a walkthrough of Riot's 10K and 10Q, because they did change a lot of their policies for 2024 from 2023. So we should be aware of that. And then I'll do a walkthrough of Mara. And the thing we really want to understand is the role that the new convertible debt is playing. So that will be up before the end of the year. I'll have the positions video up tomorrow. Remember, January 15th, the applied level gets split into two, each with its own price, right? And then from there, anyone who buys has access for a year. And then after that, you have the $25 a month recurring fee starting January 15th. So if you wanted the applied level, you'd want to make sure that you get in before January 15th. Then you don't have that recurring fee. But we're at a certain size now where new members coming in kind of have to help pay for the recurring costs that go on, because it does have a lot of value at this point. And because it has a lot of value at this point, the price I'm charging at $320, if you are in the CFA family, is simply just too low. By the way, in January, I will be extending it to FRM as well, that if you are have any FRM standing, you'll also get a discount off the applied level. And there's where we stand. I'm going to probably be spending some time in the crypto space for the applied level. And again, if you are in the applied level, I've said this to you in the video many times, not because I believe in this stuff, but because other people believe in this stuff. We can't ignore it. There is money to be made, but we got to be careful how we make it. We got to make sure that we're playing the right thing, right? Direction on some, volatility on other things. And I do believe a short on IWM while you're long these high beta stocks and be beta neutral is a nice source of alpha and volatility. So I'll be explaining that on Friday. And I won't see you again till the new year. I wasn't even going to do this live thing, but being that we had such an ugly day and I had a request for it, I thought, let's throw it out there. I will see you guys next year. And for the Applied Level subscribers, I'll see you guys on, where are we? Wednesday. I might put something up tomorrow, but it'll probably be Friday. By the way, you would have noticed today that you are now getting email notifications when a new video is posted. So you don't have to worry about when I'm going to post something. You will simply just get an email notification at this point in time. The first one, our test one, went out today. The first one went out today. I think I saw the stats on it. Yeah, it did go live today. The one went out today for CapREIT, for the financial modeling using CapREIT, getting to the FFO multiple. All right. Could you elaborate on why you dislike coin? In the Applied Level, I'll probably, when I talk about the industry structure, I'll probably talk about the exchanges at that point. And then lay it out that way. It's just that you have a choice between where you want to be, and you want to be in the most casino-like place that you can be. And right now, the miners, not so much that they are the casino per se, but they are a significant support for the players, and they have taxing authority. What's not to like? Zero cost debt and taxing authority. That's, I think, where you want to be. Anyways, there was a famous influencer who rug pulled on her crypto. Don't they all do that? Isn't this a common thing? By the way, if you want to see how slimy some of this coin industry can be, CoffeeZilla is a great channel on YouTube. He has another one. It's CoffeeZilla, and what else does he call himself? His newer channel, it's still CoffeeZilla, but he calls it something else. CoffeeZilla, and if anybody knows, Voidzilla. Yeah, CoffeeZilla or Voidzilla. I think he had to do that because he's being sued by somebody for something or other, but he exposes all of these scams. He's really interesting to watch. He's really entertaining to watch. I like his channel, but I do recommend, if you want to see, the sliminess out there, go to CoffeeZilla, and it's just great to watch because you just learn what to look out for, right? So head over there. Anyways, let's call it a night. It's been a long day, and I'm gonna go sit in the hot tub for a while. All right, guys, I'll see you next year. All right, I'm gonna hit end stream now.